Good morning. Morning, everyone. All right. So PPI was out modestly lower. Futures rose on that initially and then consolidated a little bit, rose a bit more. Now we're pulling back towards the 105. 105 is sloping up and to the right. Good morning. Good morning. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Wednesday, FOMC Day, the 13th of December. I'll be with you here until about 4 o'clock, giving you the play-by-play. First 15 minutes, I'm not doing much of anything except taking profits off the table, watching what algos are doing with their imbalances. Reassess the markets after about 9:50 to 10 o'clock. I'm looking for stocks that have high relative volume with an upward sloping VWAP for bullish trades and a downward sloping VWAP for bearish trades. Looking for a catalyst if there is one. One candidate this morning already is Microsoft. Okay, Truist Securities initiated coverage on Microsoft with a buy rating, a $600 price target. $600 price target. Okay, that's pretty cool. Nvidia closed really strong yesterday. It is currently off a couple of bucks, $1.77. Looking for that to find a bid. Microsoft, looking for a trade on Microsoft. I'm just looking through the strikes to see something with a higher implied volatility than 25, the current for Friday. Let me see what it looks like for the 29th. That's 16 days. So by Thursday, Friday, theta will start to kick in bigly. Let's see, where are we? 377. All right, let me look at 367, 10 bucks lower. Okay. Yeah, implied vol is only 16%. That's really low. That's really, really low. Delta's 28. Let me go out to January, first week of January. Looking at something on Microsoft potentially. 365. Implied vol is only 17%. So once it opens, the stock opens, implied vol should pick up if this takes off to the upside. Let me look at Microsoft on the squeeze. Yeah, you see it's still squeezing. So implied vol is pretty tight right now. So I won't take a credit spread right off the top. I'll probably do something like a call vertical or shares. I won't buy it right here at 377.34, but I will be looking to get long on Microsoft. Would love to see a little dip prior to the open. It's trading up here at 377. Still in this narrow band. So looking for the best entry. I don't want to chase it. It's up $3 right now. Probably after the first 15, 20 minutes, we'll see a little dip in Microsoft. Okay, we got 8 minutes to go. 8 minutes to go. Let me turn this guy down a little bit. He's a little loud. All right, so PPI came out this morning. Year over year, actual was 0.9. Forecast was for 1%. Previous was 1.3%. So those numbers continue to come back down. CPI still more important. CPI was okay. The numbers were okay. So we have a situation where inflation is gradually getting better. People are, I mean, we're not having a big unemployment number. We're at what, 4.7%? So we've got the best of everything right now. Markets are rallying into the holidays. As we move higher and higher, I'm doing less and less in the way of risk. I'm more interested in deltas that are 15 or 12, just really high probability trades. You won't make as much in the way of credits, but it feels like it's getting a lot more risky. It's getting a lot more risky as everyone's chasing. Not everyone, but generally, a lot of people are chasing. Let's take a look at the FANG. All right, so it's one thing to have an opinion of what the markets are going to do. It's another thing to trade price action. And this does not look weak. All right, so the New York FANG index, everything is looking pretty good. Okay, so let me just pull this down just a hair. Okay, we're breaking through this area. Okay. Mm. Okay, we got 6 minutes to go. 6 minutes to go. All right, I just want to take a snapshot of this to start the day. Mm. All right, we're fading the open. All right, futures are back down below. Looking to buy the dip. Futures pulling back. Okay, watch Microsoft. This might give you an opportunity. A little bit of a dip here, showing a propensity for bullish action this morning. All right, people will probably take profits first 15 or 20 minutes. If it doesn't slow down and starts to take off, I might just take a small trade and see how far it goes. Okay, let's get ready. Now, I got 4 minutes to go, less than 4 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 13th of December, FOMC. We got FOMC at rate decision at 2 p.m. We got Powell speaking at 2:30. So it could be a muted day. We're looking for tight price action anyway. If you look at the gamma update this morning, we're talking 0.85% implied range. It's a little bit wider than what we've seen recently. To start the week, we're at 0.55%. I believe, let me go check Monday AM. Yeah, to start the week, we're at 0.61. So we've expanded the potential range for the day by 0.2%, with resistance overhead at 4,700, short-term support 4,600. If we were to drop below 4,600 after Powell for whatever reason, I don't see us doing it, but if we did, that would be risk off. Okay. All right. Microsoft, watching Microsoft for a trade. Apple is up a bit. Foxconn got the approval to do a $1 billion, what is it? Let me see, $1 billion, invest at least $1 billion in a facility in India. Okay. NVIDIA. Okay, watching NVIDIA. Okay, less than a minute to go. All right, we're selling off here. Looking for the dip to get bought. We are open. Microsoft looking for a follow through. Okay, Microsoft looking for a follow through. Microsoft following through. Okay. Give it a few minutes for the markets to settle down. We're still fading. S&P still fading. The FANG stocks are rising. Okay, FANG stocks are rising. All right. Markets look pretty good despite the pullback. We've got all the FANG stocks moving higher. Apple, nice move on Apple. Okay, Apple. Nice move. Good job there, Apple. Okay, there goes Broadcom. Broadcom on the move. ABGO on the move. All right, Microsoft. Okay, looking for that follow through. Meta on the move. All right, I have a credit spread on Meta, so that's making money. Looks like Disney threw in the towel. Bob Iger, Bob Iger throwing in the towel with woke messages. We'll focus on entertainment. All right, just letting the markets run up a bit. All right, looking good. Meta on the move. Meta. All right, Microsoft. Okay, let's see what Microsoft's implied volatility is now. Okay. Let's see. December 15th, 29th. Let's see what the 29th looks like. We're trading 377. Let's go at least $10 lower. 377. Implied vol is only 17%. Still only 17. And that's a oh, that's calls. That's calls. I'm like, what? Puts 367. 367 put is a 18 delta. All right, so they're climbing 23 delta. 17, 18% implied vol. All right, so Microsoft starting to go in the right direction. There goes Broadcom. Broadcom on the move. Can we get another 100-point day on Broadcom? Broadcom on the move. There goes Broadcom. It's up 20 bucks, Broadcom. That looks good, Broadcom. I'm going to go ahead and take a profit on some of these. Broadcom, where are you? All right, just letting the market settle down. All righty. Looking for the SPY to continue. Microsoft. All right, volume on Microsoft looking good on the break higher. Microsoft sitting here just below, right at 377 now. NVIDIA looking for that follow through. We got it. Nice follow through on NVIDIA. January for AVGO. Broadcom, jeez, this thing's a beast. Damn. All right, SPY still no, nothing yet. So give it a few minutes for SPY to settle down. Okay. Broadcom is just a beast. I can't believe how much this stock has moved. NVIDIA doing well. NVIDIA had a nice close yesterday, following through. All right. Broadcom is just insane. This thing just keeps going. Don't chase it. Wait for dips. Okay. This does dip. This thing does dip. Mhm. Okay. Microsoft flagging. All right. AMD trying to follow through, trying to chase NVIDIA. NVIDIA's left the station. NVIDIA has left the station. Broadcom looking good. Okay, VIX is grinding a bit higher right now. All right, starting to see the profit takers. Bitcoin trying to get back above 42,000, still in the lower half of Monday's price action. Monday was a pretty aggressive selling day. Microsoft, let's see. Applied volatility is still 18%. I want to sell some credit spreads. I already have a credit spread on, but that was late last week, and the implied vol was much higher. It was like 25%. Now it's at 18%. Has it consolidated? We were looking for Microsoft to break above this high that we put in on, what was it, Friday. Okay, here is Microsoft. Okay, fading at the moment, looking for a bounce in this area. Some profit taking, people overnight that bought yesterday, most likely taking profits. That's all I'm seeing there at the moment. Mm. Okay, NVIDIA a little profit taking at the moment. Okay, Microsoft. SPY consolidating, looking for a bounce. Okay, keep in mind that the New York FANG index is where it is. Okay, we're technically trying to break higher and follow through. If we close up there this week, all right, S&P. S&P fading a bit more. We're down. Futures tested a little bit lower right before the open. And then we opened, and it's right where we opened, that little dip. Beyond Meat's a bit higher. No, it's faded a bit. Okay. Beyond Meat's off 30 cents. S&P Diamond, the Dow Jones Diamonds look good. Meta looking good. A little fade at the moment, Meta. Okay, give it a few minutes. We're coming into 10 o'clock, so we'll see if the markets continue to move higher along a rising VWAP or lower with a descending VWAP. Volume at the open pretty significant on Meta, so we're looking for that to follow through. Watching VWAP, the dark purple line. Okay, we're looking for that to turn up and to the right. Right now it's flat, flattening. Okay. GitLab trying to follow through. SPY still showing signs of potential fade. VIX grinding higher. We have a gap to fill down here at around 464. JP Morgan, the banks have been pretty strong. Let's go see what is working. Let's see what's working. So we can focus on those stocks that are working. Dow Jones, McDonald's, grinding higher. 3 white soldiers at the highs. Apple looks good. Apple. All right, looking for Apple to catch another leg higher. Same thing with Broadcom. Broadcom giving you that pullback we were looking for, Frano. See if we get a higher high out of this. Netflix, higher high. Netflix is working. Got a credit spread on Netflix. Way below price at this point. Okay. Netflix. All right, Tesla's still fading. Some, news on Tesla. Watching Apple here. Watch Apple. Nice. US Steel getting multiple bids. Okay, it is breaking higher. Okay. Don't want to chase it. You don't want to chase it. Generally doesn't work out if you chase. Boeing still moving higher. Home Depot, Honeywell, Travelers Insurance, Procter and Gamble turning off the low. I mean, if you like mean reversion trades, check out Procter and Gamble. The markets are not going to keep going straight up. Defenses will come back in at some point. Apple looks good. Microsoft, Amgen, S&P 500, Vertex, Albemarle, Take-Two, gaming stocks getting some limelight. Broadcom. Look at Broadcom. It was $900 the end of last week on Thursday. Wow. Institutions are known to buy high and sell higher. Okay, so just because the stock broke out and you think, it's too high, we'll see. The volume suggests institutions have been picking up shares on AVGL Broadcom. Okay, so here's what the markets look like right now. Okay, so tech looks good. It's mixed. Financials are mixed. So you have to pick. Communications looks good. Meta and Google are higher. While some of the smaller stocks, Disney, T-Mobile, Comcast, are lower. Verizon. Netflix is higher. Netflix is going. Nvidia. Bears getting crushed. Nvidia. Netflix. Broadcom. Apple. Nvidia. Broadcom, next leg. Can we do it? Next leg. Meta, Google, Netflix. Netflix looks better. Netflix. Netflix pushing away from VWAP. That's what we want to see these other bank stocks doing. All right. So it's 10 o'clock on the East Coast. 10 o'clock. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday the 13th. We have FOMC. We have Jerome speaking at 2:30. Netflix is at the highs. We've got a mixed bag on the New York FANG index stocks. We're looking for a bounce. And some of these names, Snowflake, Netflix, Google, Amazon. Amazon's starting to bounce. NVIDIA at the high of the day. Broadcom consolidating. Oh, I've been posting in your channel, Frano. Sorry about that. All right, more fade going into. Looks like we might fill that gap. Netflix at the high. Okay, I smell something really weird. I'll be right back.
is going to be a tough one to break too. Well, get a little bit more of a softer tone from Fed Chair Jerome Powell. He starts to that will do it. The markets a little bit more. That seems like it could do it, right? Yeah. I mean, we've seen a pretty strong, robust round of earnings. A lot of optimism still. Still not really sure how it's going to pan out in terms of providing revenues, but AI has got a lot of momentum. There's a fair amount of energy, Oliver, as we head into the end of the year, to say the least here right now. Again, I think when you look at the U.S. dollar, it's somewhat supportable. We've been seeing maybe the market's getting a little bit ahead of itself relative to what we've seen in terms of the dollar. And when you look at that inverse correlation, but I think this is really what the focus is here right now. The fact that we've come off this 5% level in yields, back down to 4% or just above it here. But I do want to direct your attention over to those highs. Again, I've been harping on those levels from last fall, October 2022 highs. I wouldn't be surprised to see a bit of a range-bound trade. It's kind of where we're at, you know. It kind of settled back into your point to that level and found some support for yield at that level. We always talk about old areas of resistance, new areas of support, and the idea being, again, here are two scenarios. One is, okay, you get Fed Chair Jerome Powell kind of appeasing the bulls at this point, feeding into that more softer tone and what we've seen in terms of markets. And then we could see continued downside here. That could fuel the market higher. Or we see a scenario where Fed Chair Jerome Powell kind of sticks with the message that he's been communicating and not necessarily concerning the market at this point, but hey, higher for longer here, right? Data dependence, and we continue to be a bit range bound. But I think either one, rates lower or as long as they're hold below 5%, Oliver, I think very much supportive of indices at these levels and possibly even further gains at this point. I mean, again, if investors, earnings, all the other things kind of fall into play, I mean, that's market doesn't seem to be too concerned that it will break these levels to your point. Exactly. That's a really key point. The last thing I think that we should say here is that the difference between bonds and stocks feels really important right now because you've got this long-term trend line for yields that would suggest we needed something kind of dramatic from Powell to break this down. So I go into today thinking that yields are pretty well supported, but the stock market may not have a problem with that if it hasn't already had a problem with the elevation of yields where we are. The stock market doesn't like when yields go bananas or break out to new highs. So it seems like equities have been able to navigate pretty much everything to really take a shocker to break stocks. Bonds, on the other hand, feels like we could get some selling. Yeah, I was surprised, Oliver, when we took out the October highs. Again, the fact that stocks didn't respond in terms of rates, right? Yeah. When we took out last October,
Netflix is cooking.
4% level, stocks didn't really respond as negatively as we were expecting. Again, some of that could be
All right, Netflix is doing really well. Microsoft, a little dip initially, better entry on Microsoft. It's only up $1 now. Has a $6.50 ATR. Microsoft. Apple squeezing, about to go.
maybe a little bit longer of a timeline to give a final verdict. But yeah, like nice little thing. Ben, appreciate it. Most of you too. Every day here before things move out.
Netflix high of the day. Apple's about to go. It looks like squeezing.
Take a look at Adobe. Am I right and fair in calling this one of the
I
hottest
did it again. I
AI
posted.
software trades?
Shoot.
Yeah, definitely, especially when you're looking at the products that we've created and actually launched new products like Firefly that's being utilized to create content from generative AI. And I think that's going to be a really key area to kind of focus on when we get to the conference call here. And you kind of highlighted it up there. Social media is a very big function of their business. And as we start to
All right,
see
Netflix is
more and
gone.
more
SPY looking really good for a follow through. 4,600, 4,650. 4650 resistance, 4676 after that, and then 4700. Ultimately, if we could see a follow through this week, would be good. Broadcom looking good. Broadcom looking really good. Okay, Netflix is gone. Space shuttle. Netflix is gone. It's off the screen. Sorry about that. All right, volume looks good. Volume. Nice job, folks, in the trading room. Netflix has gone straight up. Wow, that's nice looking. Netflix. Snowflake looking good. Okay, SPY turning up, looking good. All right, so far so good. The FANG stocks looking good. Okay, let me see what I need to do. I need to manage a position here in XBI, biotechs. Okay, these are just going to keep going. My son has 1229 expire at the end of the month, 2 weeks from now. XBI credit spreads. Currently, those options I think are almost zero now, so I can close them at any time. Just don't want to pay a brokerage fee. He has 25 of those. XBI. What is Microsoft's? Okay, implied vol now. Implied vol. 45 minutes into the trading day. Let's see what that looks like. Microsoft 367. Oh, still only 18%. Okay, I was looking at another credit spread on Microsoft, but I'll pass for now. Excuse me. Yeah, I hit the mute button. Sorry. Thanks. Okay, Broadcom still pushing. Netflix at the highs. Apple's about to go. All right, Apple with the squeeze. Looks like it might want to go here, Apple. Let's go take a look at Apple. And look at the squeeze on Apple. Nice tight squeeze. Getting ready to go. Okay, if we do get a move on, watch these Bollinger Bands. See what they did here? Just prior. Opened up top and bottom. That tells you to look for a fast move as volatility expands. We're tightening again. Look for that trigger. Look for Apple to go. Look at Netflix. Look at Netflix. What it did. Look at the Bollinger Bands this morning. Tight. They move away from each other. Boom. Takes off to the upside. Now the lower band's turning up. What is that telling you? That's telling you to look for a flag and potentially a grind higher. Okay. Bollinger Bands tell you a lot of information. I would say it's a good idea to buy or find a copy of Bollinger on Bollinger Bands by John Bollinger, obviously. Basically, price action, 95% of price action, in a nutshell, 95% of price action contained in 2 standard deviations. And the 21-day is the middle of the volatility. When the Bollinger Bands come together, that means volatility is collapsing. That's usually a better area when you want to start to buy options. You want to sell options when volatility is expanded. And if you're looking for a big move in something like Netflix on the daily, you're looking for these bands to open up in the opposite direction. Let's go to the 60-minute instead. 60-minute. Okay, so those are narrowing up a little bit, testing the upper bands. You can also use the bands for if you're selling premium. If you're selling premium, like let's say you're looking for a credit spread, you could use the standard deviation 1 band for support or 452. On the upside, looks like these upper bands not providing much resistance. Okay, Netflix pulling back a little bit. Okay, FANG stocks got a little ahead of themselves. All right, AVGL coming back in a little bit. Okay, looking for a little follow through. S&P is testing the highs. Let's go back to the S&P. SPX. $46.50, $46.76. We're right at $46.50 now. 46.76. Let's get up here. 46. $46.76. All right, it's off the screen here. $46.70. Let me just put this on here while I'm okay. 46.76. Okay, so here we are now. We're at 46.50. Want to see this push higher. 46.76 is the next level. We're right at this point where we could just consolidate right here. VWAP is starting to flatten out. Looking for a breakout. Looking for a decisive break higher. Broadcom. Higher low printing. Looking for VWAP to continue turning up into the right. Okay, S&P breaking out. Goodbye. Soul Train. The Soul Train. Grandma yelling on CNBC? Yeah. Remember when she had that? Remember the taper tantrum? All right, we're continuing to grind higher. Okay. Look at Broadcom. Yeah, Don Cornelius. Here's a factoid. I used to teach dancing with Arthur Murray. Used to teach dancing when I was in college. No, hustle, rumba, tango, foxtrot, cha-cha, stuff like that. It's a lot of fun back then. A lot of people were dancing. Not like this, what is it, Dancing with the Stars or whatever it is. All right, the markets continue high. What the hell is he being talking about? Markets are moving up and to the right, so I'm just looking for higher highs and higher lows. I tend to drift off from time to time. I'm going to take a 5-minute break. I'm going to get some coffee. Not going anywhere. Broadcom's still on the move. Broadcom still going vertical. All right, looks good. I'll be right back.
Looking here at the chart there, it's kind of a range-bound price action for the past, summer months here. Then we had a break above our old highs here, 152, this green dash line here. That was significant because then that resistance point became supported here. We had a couple touches of our yellow 21-day exponential moving average, then a nice gap up for today's on today's news that brought us quite close to this one spike that we had a couple of weeks ago near 160, 160. So we did clear that today. We're just kind of nosing our way above that point right now. Quite a bullish situation here to be included in one of these major indices. So, that it'll be interesting to see how the move progresses from this point because now we're at new yearly highs. RSI mostly was following price action for a bit, moving into that overbought area. We did retreat a little bit from that point, had a sharp decline, but we did stay above that 50 midline that separates bullish and bearish momentum. Now we're cruising back upward here, almost erased all that brief decline here. Look for a push above that 70 level for signs of further bullishness here. Now for potential resistance, plus one standard deviation channel comes in near 174 currently. That's a bit of a stretch up, but that's what we could use to potentially project resistance.
As US Treasury Secretary Yellen expects inflation to continue to come down, sees inflation rates beginning with the numeral 2 by the end of next year.
Near 157. Then we've got our 21-day EMA and our old highs that I mentioned earlier, our green line, coming in between like 153, 154. I think this right there is the GTA candle fade. I think you might be right, yeah. Yeah. So we're back into where we were at that overnight rally. If I'm right, I'm pretty sure I'm right on that, which was about a week ago. We're back to that, trading a little bit above it. That seems like a pretty bullish event, and that ultimately the market has kind of.
So again, US Treasury Secretary Yellen says likely to reach inflation in the 2% range at the end of next year.
Trading back to that intraday high with the candle pushing upward. So seems like a pretty good chart, and seems like maybe a little bit of understanding now the timeline for the big debut in more than a year. Speaking of NASDAQ, let's talk Microsoft. Hang in there. I mean, pretty solid. Kind of had a few days last week where we lost a few of those mega caps, but I mean, analysts still loving it, right? I think it's held on to 50% gain.
US Treasury Secretary Yellen says there are risks on the horizon, but doesn't see risk of a recession as particularly high.
Been strong, and actually this analyst out of Truist even further upside potential with a, now mind you, I think this is important because initially I thought the $600 price target, I don't try to pay attention so much to those, but 600 is ridiculous. It implies like 60% upside when we closed yesterday. But that's a 3-year price target. So that's a little bit different. That changes things. We don't expect shares to rally 60% in the next 12 months.
I didn't know people were doing 3-year price targets now.
I didn't either. I think
that's like the dream job of an analyst. Slap on a 3-year price target and work from home the next.
Or it's a risk because I feel like just the volatility in the AI market, I think that's a little bit of an optimistic call. They did highlight their early investments in AI, which has positioned them to take this leadership position in what they view as the fastest growing multi-billion-dollar market in technology. They did say though their early execution in the generative AI market has been impressive. They actually believe Microsoft is poised to further deliver upside to expectations as far as when things start to go into production here. They continue to experience AI tailwinds to their business. They say will impact it for the next decade. If you're a believer in AI, I think that you follow this very closely.
All right. Had to wolf down a Costco croissant. Costco. Let's see. I'm looking at Apple potential credit spread. Let's see. Where is Apple? Let's go $10 out of the money and see what that looks like.
Well, good, but kind of an odd price action situation that we've seen here because we had a trend line going upward here in blue, then it progressed to a much steeper trend line in purple, then kind of relaxed a little bit.
Applied volatility is almost 20%. Let me go to 185. Put 19% implied vol. Let me go out to January on Apple. Let me see what that looks like. Apple January. Let's go 185. Let's see what that looks like. 185 is a 13 delta. It's got 18. I want to see implied volatility at least 30, 40%. I want to sell that volatility. That tells me that Apple's still in a squeeze, right? Yep. Okay, so I'm looking at Apple here. So if I want to sell premium, I want this number right here, implied volatility, to be at least 35%, 40%, because I want to sell that volatility. I want to look at this delta. If you're going to sell premium, 13 delta, that tells you you've got an 87% probability of winning, 86% probability of winning. The person who would buy these puts probably has about a 14% probability of winning on the trade. So you want to trade that, and you want to be making sure that the spread is pretty narrow. In this case, it's a penny on Apple. That's pretty good. Theta is 2 cents a day. Volume is 2,000 contracts. Open interest 5,450. So that looks pretty good. If this number was higher, like say 35%, I'd be interested in selling this put to 185. That's $11 out of the money for January 19th. But I'll have to look at another candidate because I want implied vol to be a bit higher. Netflix is probably, well, Netflix already have a credit spread on, so Netflix is having quite a day. I think you would say Netflix is having a good day. Not much to do. Not much to do, and the list to come for you, bad boys. Nice move here. Nice move. Pretty good day on Netflix. Okay, let me see. Let me just mark this up because I want to have a copy of this. Netflix is gone. Okay, Netflix. Excuse me. All right, Netflix. 430. I have the 430 put. Okay, so I don't think we're going to get down there. 430 put. And I bought the 420. 420 for protection. All right. Mm-hmm. All right, so okay, looking good. 430. $430, $420. That's my credit spread. As the markets move higher.
is there.
Let's go to Jen. When we come back, we'll update in the merger world. Did the steel takeover prices up 3.5%? Give you the update there before we head to our market.
Okay, we're definitely having a good day on Netflix.
I remember when I first started flying, and we would experience turbulence, I would watch the flight attendants. They're not
Good day on Netflix. All right. NVIDIA. If you're looking at NVIDIA for an opportunity, watch how it behaves here at VWAP. If we see volume pick up again like we had this morning, first thing in the morning, volume picked up to more than 3 times normal. Our vol was at 3 times normal.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Kennedy live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device. For free.
All right. Okay, looks good. A little dip there on Broadcom, looking for a follow through. Netflix hanging out at the high. Netflix probably should take some of Netflix off. What I got here? Netflix is, oh, I got January, so got plenty of time. Plenty of time.
George, to me, it's like the market would require something shocking to break its strength. But the definition of shocking might shock you when the market's pricing
Yeah, it's funny.
tell us that forward cuts are coming. The dots can't possibly signal that. The market's gotta know that, right? It can't be that dumb. There can't be an expectation that the dots are gonna live up to what's actually priced in. Is it possible? It's possible. I think if you look at the 2-year treasuries, it doesn't look like that. Dots could show 4 cuts. Dots might indicate 4 cuts. One other picture that may change. I linked with you today. I'm just going to take the U.S. Treasury market as a proxy because I know the CME is looking for pretty close starting at $1 a share. I think if you look at the 2-year yields right around 4.68, that's about 75 basis points. So I think at the end of the day, that's where the market's going to be for the end of the year.
Okay, Netflix. I think you get the point. Sorry, it's been on the screen a bit longer than anticipated. All right, so AVGO bringing back, coming back a little bit, looking for a bounce. Broadcom.
I think at the end of the day, they're going to be balanced. I think if you just consider looking at core PCE, core CPI, on a relative basis, month over month. I mean, year to year, if you look at the core CPI, it's over 4%, 3.5% of PCE. I don't think they're really restrictive, to be honest with you. I think they're right in a good position. If you want to say between 1% and 2%, interest rates above inflation, I think that's still restrictive. So I think, they may mention that inflation is still above their average target of 2%. They're not going to be looking, right now, they're not looking for 2% on the dot at a particular month. It's an average target. So we're still going to run it. So I don't necessarily see any dovish commentary. I think they're going to be balanced. When is the market gonna want balance? Scott wants a big reversal. Wants it now. Wants it in 2.5 months. Yeah, you're absolutely right. But unfortunately,
We continue to see higher highs and higher lows until further notice. Going into Powell, it's pretty active for a FOMC day, at least as far as price action is concerned. Volume, not so much. Volume is pretty low. Block volume, we've got about 7Q, 3 on the SPY, and 4 on IWM blocks. 7, 3, 7, 4, and 3.
well, I think they'll be buying the dips if there's any dips.
7Q, 4 IWM, 3 SPY blocks, block trades. Usually on a, really heavy volume day, we see 3 times as much in the way of block volume. It's just one of many things that you want to keep an eye on, aside from price and up-down volume. Up-down volume at the moment is mostly bullish, although it's 1-to-1. So I'm not surprised. Not surprised. Okay. We can have an opinion about the news that Tesla has to recall about 2 million cars, but watch price action. If price action starts to firm up and we see a bid, volume picks up, just try to coordinate with support levels. If we get a bounce at a support level and the volume picks up massively, I would say that would be a good entry, potentially. That said, we do have FOMC today. Powell speaks at 2:30 at a presser. Rate decision at 2 p.m. So there's a lot of ways to play this. I like the idea that some of you are talking about, reducing your exposure, going more to cash until after, at the earliest, after FOMC, or maybe just stay in cash into next year. Some of you are junkies like Cayman, myself. I think I'm a little bit more tame than Cayman. Cayman is like constantly at it, seems like. Mm.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds.
Yeah, that is pretty conservative.
No politics, no noise. Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device or
Schwab Network, powering every investor.
Yeah, Jason, that's pretty good. That's pretty good. I'm selling more premium. I'm not buying as many vertical positions. If I want to go long Microsoft or long Broadcom, I'm doing less in the way of taking a vertical or straight calls. I'm selling more premium. As people chase these higher, it's pulling all the price action away from the premium, the puts that I'm selling, and I'm making good money on the options that I'm selling. Anywhere from $150 to $200 per contract. I'll sell it to you. I think I have pretty good probabilities at 15 to 18 delta. That's giving me like 80%, 82% probability of winning. The lower the delta that I sell. Oops. Netflix is at the highs. Apple breaking a bit higher. Apple pushing higher, trying to push away from view Apple. But remember, implied volatility is only 18% on Apple. The near expiration, from here out to December 29th, IV is pretty low. I want to be selling premium. If I can find some good premium to sell and only have a couple of weeks, 3 weeks to hold on to these positions, and I got a high implied vol and the stocks don't move that much, I just collect that premium. I'm more interested into year end rather than taking a January or February positions. Right now, I'm just thinking short term, like December 29th, sell premium. A lot can happen into January, February. At this point, I'd like to see what Powell has to say. Okay, looks like we're going to go a bit higher. Okay, it's 11 o'clock already. You only got a couple of 3 hours to go.
there's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers. Trading Schwab is now powered by Ameritrade, unlocking the power of InfoSwim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade green with Schwab. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
From the heart of Wall Street, New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account renewals, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features.
All right. So Apple's just sitting here. VWAP is starting to flatten out. We're going into, well, it's 11:05. We still got time for them to goose this a little bit more. S&P looks like it's starting to stall in this area. Okay, we're between support and resistance. Support here at 46.50. We got a resistance level at 46.76 overhead. Okay, and there's a little bit of volume here at 46.65. But for now, we're just kind of flattening out. All depends on the FANG and the big cap stocks like the Dow Jones, etc. All right, Microsoft pulling back a bit, Tesla pulling back a bit. All right, we're starting to fade from the high of the day.
I remember when I first started and we would experience turbulence, I would watch the flight attendants. They're not nervous this time around. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through. But I definitely feel privileged to be in that position.
Young lady who was mid-30s, couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through in between. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, they were helping people. The client don't care how much you know until they know how much you care.
Okay, Kava, now that the lockout expired, Kava seeing some pretty massive volume yesterday. Okay, a little selling into that. Now, if this follows through and breaks above 40, I would definitely be interested. Okay, Microsoft is flat on the day now. Was up above 377 this morning. A little profit taking. Can't get too far over your skis before the random walk that we're watching comes back. Looking for these dips to get bought, however. There goes XBI. XBI making new highs. All right, so if you're looking at Kava, Kava had a huge volume yesterday as the lockout expired. A lot of people were expecting the current the going thinking is that once the lockout expires, that insiders will start to sell. Not the case yesterday. We had big volume. We have an inside bar today. That's technically just means that we're in the upper quarter of yesterday's candle. Now, if we break above 40 and start to move to the upside, that would only occur if this turns green. That would only occur if institutions are buyers. Okay, so what do we know? We know that back here in August and September, it was mostly marked down after the IPO, and then we went sideways. That's accumulation. Now, if you look at the weekly, it's mixed, but we can definitely see accumulation. So you got to stop underneath 31, along above 39.40, something like that. So it's either going to move higher, lower, or sideways. So just keep an eye on Kava. That could go. Okay, most of the FANG stocks are seeing a little selling right now. Do remember that we have rebalancing. We have a rebalancing this week in the Qs. Some of these stocks are too much.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. Another guy was charging $400 or $500. He just didn't want to do that. Proud of the price he was charging. My dad instilled in me most of the people that be proud of offering a good product at a fair price. I think he'd be extremely proud.
All right, so the FANGs are mixed now, so no signals right now. No signals for now.
We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalini, live on Floor Stock Exchange. For you, we're starting on CPI index. Well, coming up, we've got big three, ExxonMobil, General Motors, and Boeing. Later on, the busy setup.
Hmm. All right, so IBB is on the move. IBB, I have a vertical on IBB. This is looking really good. Look at the volume over the last 5 weeks. IBB Biotechs. All right.
Our secretary also told Reuters
All right, so biotechs look good. XBI looks good. All of these are breaking higher. LABU continuation. All right, looks good. All right, looking really good. Really, really good. All right, so we're just consolidating at the highs. Uh-oh, StockTorch has a bad gateway. All right. All right, now it's working, I guess. IBB. LABU. Going to test the 200 days soon. right, got a little bit more volume coming in. Nice little follow through so far. Okay. Mhm. All right, Microsoft is squeezing. Microsoft squeezing. It was up at testing the highs this morning. Hopefully this is temporary, this little slowdown. Looking for this to head back up to the highs. If this volume starts to pick up, that would suggest that there's more sellers still sitting in here looking to get out before the end of the year, maybe. I do, just keep in mind there's not in Microsoft's case, but just in general, tax loss selling, you will see some of that. That said, let's go take a look at advanced decline percent, see what that looks like. All right, so that turned back down. So pretty much what we're seeing, we get this market to move higher. We got a divergence, meaning these lines turning down are telling me that there's some selling going on into strength, which makes sense when you think about it, going into the Fed. Not like earlier in the week where this was moving higher as price was moving higher. So that was a lot of buying. And if you were paying attention, there's been a lot of call buying on Monday and Tuesday. So trying to make sense of these cross currents and cash flow and money flow, looking at the time of year and the fact that we've just continued to move higher. One of the things I always like to do is, okay, I have this thought in my mind. What does price say? Does price say get worried? So far, price is saying lots of buyers. We're breaking out to new high on the FANG, New York FANG index. Okay. After gaining a 102% since the October, November low, 100, 103%. We're up like what, 105% from the October low. Momentum indicators are turning. Stochastics is embedded. And price action just keeps lifting. So it's kind of hard to short that. Well, I think it's going to be a double top. Okay, well, maybe it is. I think it's going to fade from here. Well, maybe it is, but price right now is not agreeing with that premise. Let's look at the New York Stock Exchange, 2,700 stocks. I'll look at the composite. That's 2,000 stocks, and we want to see what message we have here. The message is, survey says, we're bullish. That black line is rising, is it not? And it made a new high. So that's telling me there's more new highs than new lows, even though advanced decline percent currently is pointing down a little bit. They just say there's a little selling going into the strength. Advanced decline in the middle panel is above the 200 period moving average. 200 period had flattened out after rising into July, August, September. October, flattened out November. Now we're making a higher high. Oh, that's interesting. And we've got a 86%, 87% increase over yesterday's. Yesterday was pretty bullish, right? We got an 87% increase in the number of new highs compared to new lows. This is a simple calculation. You take new highs, just subtract the new lows on the composite 2,000 stocks. You got more stocks making new highs than there are making new lows. So that's a pretty good indicator of direction, at least for now. What else? Let's look at the put call ratio. Okay, that's starting to turn up. Okay, it's back to the neutral zone. So it's 0.99. So that's basically neutral. Okay. Puts and calls are about neutral. The index puts and calls, more puts are being bought on the index as that line rises, getting close to that upper Bollinger Band. What does that tell me? It tells me that the trend is your friend for now. It just keeps moving higher. Do I want to buy the high of the day? No. Take some profits off into strength. Bullish percent. The number of stocks on a point and figure buy signal continue to rise. What does a point and figure buy signal look like? All right, let's take a look at, say, Netflix. Point and figure buy signal looks like this. Point and figure buy signal. You see that green X? Okay, we're starting to make progress. X's are buying, O's are selling. We're looking for a break above 484. We've got a green X today. That just means we filled that box. Filled that box at 476. Okay. 475. Oh, I'm sorry. What do we got? $4 between each one. 472. 472 filled. Okay. Let's look at another one. Let's look at, say, Meta. Let's look at Meta. Meta, okay, you can see a green X. We just filled 336. Next level is 340. And if we hit 344, that would be a point and figure breakout. What else? Let's look at Broadcom. Broadcom is a big one. Okay. So once Broadcom broke through 1,000, it went quickly up 90 points, almost 100 points. We're adding 2 X's today. You see those green X's? Okay, so this is really bullish. This is what I learned to trade with when I first started trading. Very easy. You look at the index at the end of the day. You put an X if it filled a box, rather than trying to chart out a candlestick chart or a line chart. This is pretty easy too. You just fill the box if it's a day of selling or a day of buying, mostly buying here. In order to start filling with O's for selling, you need at least 3 boxes in the opposite direction. So we need to see 1070 and then 1060 fill. And then you would start to fill boxes like over here at 990. When it reversed back, you need to see 3 boxes. So that's point and figure buy signal. So that's what this looks like. That's what that's what this is telling you. Bullish percent. Bullish percent is nothing more than number of stocks that are on a point and figure buy signal. So that's moving higher. That's bullish. Right now we're taking back a little bit at the highs of the day. And I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday the 13th. We got FOMC rate decision today at 2 p.m. We got Powell speaking at 2:30. That's always fun, listening to Steve Leisman ask questions. What else can I tell you? Let's see. Let's look at this. All right, so this is the McClellan volume oscillator. So when volume hits extremes in either direction, we hit these red or green zones. So right now we tag the red zone. We're at the highs. So possible resistance here, as we know, just overhead. Potential resistance. Let's take a look at the FANG 10. And we'll sort these by performance. We like to see more green than red. Okay, right now we got more green than red. We got out of 10 stocks, we've got 3 red on the day. We know what Tesla's doing. Netflix is number 1. Netflix is up 2.65%. That's not bad for a $460, $475 stock. Okay, so we got 7 out of 10 green on the New York FANG. That's good. Cycles. Let's take a look at the weekly cycle on the Dow Jones. Dow Jones weekly. We want this line to be turned up. You see that? That's not my opinion. That line is moving higher. No? Look at the volume on the weekly over here. Look at the volume. This is a weekly chart. Dow Jones Industrials. All right, you could trade with the diamonds, similar to the SPY ETF, breaking out to new highs. Okay, let's take a look at, since it's moving higher and it's in a bullish cycle, let's take a look at the stocks they're in. The Dow Industrial Components. Let's see, we'll sort these by performance. Okay, we're about 50-50 really. Walgreens Boots Alliance, of course, that one shook a lot of people out on that news on Monday. Wix, so they're still buying here around 22.50. There's Walgreens is and Boots are trying to separate, I guess. I think that's what the news was. All right, so that's Walgreens. Number 2 is Procter & Gamble. Higher low. Could be some defensive positioning. Speaking of defensive, let's go take a look at this XLY XLP ratio. If this is moving higher, that's telling us to stay bullish. If it's peaking, telling us to start to caution. The reason why this would peak like it did back in the bear market 2022 would be institutions massively changing from a bullish to a bearish sentiment. We don't see that yet. Looks nothing like 2022 yet. Okay, the bull market technically started October, November. This is a lagging indicator, but it turned in January, made a higher low, and since has been going straight up. So for the most part, this is still bullish. There's still a bullish tailwind, if you will. All right, so let's look at the XLY. XLY, consumer discretionary, should outperform in a bullish market. It's trending. Should outperform consumer staples, a defensive sector. All right, so today XLP looks pretty good. So we got some people buying some of these defensive names. I saw Sunrise Trader buying PepsiCo. Let's see what Pepsi looks like. PepsiCo, PEP, and Coca-Cola. All right, so these are more defensive. So if you're thinking, all right, you still want to be in, like Jason, you were talking about stocks. You're in 80% cash. So if you were looking to position in something that's trending but yet defensive at the same time, you could look at Coca-Cola or Pepsi. This is a nice trend. You know, it's a defensive stock. It's one of Warren Buffett's biggest positions. Hard to believe Charlie's not here anymore. Charlie Munger. But yeah, this is defensive, and yet it's trending. So you could buy shares, sell covered calls for a dividend, an additional dividend. I don't know what is the, let me just shift gears here. I'm going to go to this chart for the moment. While I'm going to talk about Coca-Cola. I'm going to look at Coca-Cola options and see what the implied volatility is. Probably not much. Probably not much. I would say it's maybe 15% implied vol on Coca-Cola. Puts. Puts. Let's go to January 19th, 37 days. And we're trading at 56-ish, 59, 50. Okay, let me look at $10 out of the money. And implied ball is 34%. Huh. 35%. That's actually pretty good. Now that I would not have figured. Implied balls at 34%. It's trading 59. 28%. Huh. That's weird. Why? Why so much? Implied balls 22%. Something doesn't sound right. It's got a 6 delta on a 55 put with price action at almost at 60. Huh, that's weird. $5 out of the money and it's only got a 6 delta. Let me check Schwab. Coca-Cola. Coke. January options. Puts. Monthlies. Delta 55. Yeah, that's right. Wow, it's only a 6 delta. That's weird. Huh. Well, the puts, I tell you what, the puts do not deliver any kind of premiums. 25 cents for a 57.50 put. That's only $2 out of the money. That's weird. Okay. I've never sold a credit spread on Coca-Cola before or any defensive stocks that I can remember. Mostly growth stocks selling credit spreads with high implied vol. Coca-Cola's got only $5 out of the money. It's got an implied vol of 25% and a delta of -6. Yet price is only, you could buy or sell a put for 8 cents in January. That's weird. That's right. That's exactly right. All right. So it looks like Coca-Cola is going to continue trending. February calls on Coca-Cola. When does Coke report earnings? KO. Coca-Cola grinding higher. Looks good for 64-ish. Coca-Cola. Okay, so Coca-Cola had a dividend in November on the 3rd, it looks like. Okay. They had earnings in October, end of October. So it won't be until January. Okay, I took a long on Coca-Cola for now. On the next dip, I'm going to take a long on Coca-Cola. This looks really good. It's above the 200-day trending. And I got a dip right now, dipping here. Watch for a test of VWAP. Okay, watching Coca-Cola defensive. Walgreens, Boots Alliance, Walgreens, let's see. Walgreens, just looking at the options on Walgreens. Corey, let's look out to, first I'll start off with end of the year, 12/29. Puts, let's see, where are we? We're at 23. What's the 20 look like? That's pretty cheap. A lot of stocks have lost. Okay. 20, what is it? 23. Well, options are really cheap on this one. Call side is much beefier. Corey, the call side is much beefier on Walgreens. If you look at the cost of near the money calls versus puts, I guess they're about even. But once you start to get away from price by a couple of bucks, the option drops in price quite a bit. Shake Shack moving higher. Microsoft, what are you doing, Microsoft? All right, we just the slow fade from the high. It's pretty much what you would expect on a FOMC day. Actually expected a little bit earlier. Didn't expect that run up that we had starting at 10 o'clock. We ran from what 44.46 up to 44.56 ish, somewhere around there. We're right at VWAP right now. Okay, what's Microsoft doing? Microsoft turning back up now. Okay. So profit taking at the open. We drift below VWAP. VWAP is down and to the right. We made a lower low, filled that gap, turn in the corner. Now watch volume. If it picks up, that would be good for a long on Microsoft. This is the kind of thing I was looking for. I was looking for Microsoft to do something like this for a better entry. Instead of chasing. Broadcom, same thing. Broadcom gave back some, giving you a better entry on the pullback. Netflix giving you a little pullback too. The VWAP starting to bounce. All right, all the FANG stocks are starting to show a bid. FANG stocks starting to show a bid. FANG stocks are catching a bid. Shorts covering first. Okay, so probably shorts covering first on the FANGs. They're starting to see a bounce. Tesla starting to bounce as well. NVIDIA, little fade back below VWAP. Okay, Tesla was in a sideways range. It is now breaking the bottom of that range. Okay, let's see what that looks like right there. Meta started off the day very strong, a little fade from the high. I'd like to see these FANGs continue a bit, but I'm not expecting a whole lot of volume between now and 2 o'clock. Makes a lot of sense. Look at the open. The first 15 minutes, what do? We're taking profits off into strength. Why? In this case, you've had swing profits in some of these positions. How risky is it going into the Fed to be starting brand new positions unless you're expecting to be out before 1 or 2 o'clock? Right now, the volume is tapered off and stocks are not moving at all thanks to the lack of interest going into a Fed decision. So most people are expecting the Fed to hold rates where they are higher for longer. That's been his mantra. If there's any change in sentiment or tone, or if he says something like the markets are just too out of control, I got to put the brakes on, I got to raise rates. Obviously, that's sarcasm, but if he said something like that versus just keeping the same mantra, it's too early to start to change rates. Worst case scenario, maybe he says pause, or best case being pause, I guess. I don't think he's going to say anything about cutting rates. I think that's pretty. Most people are accepting the fact that he's not going to say we're reducing rates. We've seen enough. Last time he said that, he's seeing progress with what the Fed has been doing. He's been seeing progress in inflation, progress in the things he's been looking for. Remember the non-farm payrolls last week, CPI, PPI today was lower than anticipated. Consumer sentiment, let's go take a look at that. So, maybe I don't know. You got to keep an eye, keep an open ear, an open mind to what the markets do an hour after he announces rates. Okay, we can see. Okay, so industrial production is slowing down. Okay, so the last time it slowed down, most recent time it slowed down was over here in 2018. That was during the Trump administration. Remember, the beginning of 2018, we started off with tariffs against Chinese solar panels and washing machines. Yet the markets continue to move higher into 2020. We sold off, obviously, February, March of 2020 and COVID. But for the most part, the markets went higher, even though industrial production started to slow down. Then we had a reset in 2020. Prior to that, industrial production peaked in 2014. And if you recall, we had a pullback in the S&P 500 about 10 months later. We're just peaking now. 10 months later, we're talking middle of the summer. August again, maybe. I'm not suggesting the markets are going to continue to move higher because, we are a bit frothy. Let's look at consumer sentiment, Michigan consumer sentiment. Okay, that turned back up. Okay. So back in July, the last time we peaked, if you recall, we were at 72.6. Now we're back to 69.40. Okay, so we got a couple of more notches to go to move above this level. Okay. What else? Let's take a look at the mortgage rate. Why the mortgage rate? Well, if people start buying homes thinking that this is about the lowest we're going to get, or maybe we'll get lower, almost 7%. So it's almost 80 basis points off the high for a 30-year. Okay. Okay, that's moving lower. The 15-year. Okay, let's look at the dollar, US dollar. If you're bullish, you want to see the dollar rolling over. That's pretty much okay. The 10-year yield, want to see this moving lower. That's moving lower. So more people are taking some profits off, it looks like. Okay, continuing along with that mindset, we've got consumer sentiment rising. We've got industrial production peaking, but that precedes by about 10 months, using recent examples, 10 months before we actually see price action, peak or fade. Not suggesting we're going to keep going, but that's where a lot of targets are. I believe Oppenheimer is above what, 5,200, something like that. Most of the targets for year, what was that? The year end, Russell, if you're listening, what you posted the other day, was that year end or first quarter? 5,200, 5,000. That seemed to be acceptable by many analysts. Okay. And we know that if we look at the 5,000 strike has been building. All right, here's S&P here. See over here on the right? See the puts over here starting to build and the calls? The orange are calls, the blue are puts. This started to populate about 2 weeks ago. 2 weeks ago on Sunday weekend video 2 weeks ago, I told you that Brett had mentioned Brett over at Spot Gamma that the 5,000 strike was starting to build. Now notice that these peaks are starting to reduce in height. Okay, right now we're above 4,600. That could all change with the Fed. That could all change with whatever Powell says, right? But the S&P is currently at 4,650. 4,650. So here's 4,600. Here's 4,625. Here's 4,650. And look at that. Look over there on the right at that 5,000 strike. 4,600 is still the tallest spire, but we are still moving to the right on this chart. 4,650 right there. If we start to grind higher, the next level is 4,675, 4,690, and then 4,700. It's possible we could see 4,700 this week. Many believe that 4,700 next week is pretty high on the cards, provided the Fed doesn't do something or say something that's any different than what he said last time. I'm not anticipating that he's going to say anything different. So that looks pretty good. So we know 4,600. Anything below 4,600, put that on your, write that down. If we lose 4,600, that'd be risk off. Speaking of risk off, let's go take a look at bonds, junk bonds. Okay. So 4,600, just make a note of it. Junk bonds. Oh boy. This is bullish, folks. Okay. The people that trade junk bonds and high yield corporate debt, they're a special breed. Not only is the bond market twice the size of the equity market, twice the size, more than twice the size of the equity market. And the Forex market dwarfs all of them. The Forex market, we trade in the trillions of dollars every day on the currency market, Forex, foreign exchange, trillions. But the bond market dwarfs the equity market. So a lot of times you'll see this leading most of the time. And you want to pay attention because if this is moving higher, these people that would trade this are risk averse. You know, they would only trade bonds if they thought that the markets had a small chance of pulling back dramatically. At this point, that's the way it looks anyway. All right, let's look at bonds. Okay. So you got three signals right here that look pretty bullish. You got IBB up and to the right. You know what IBB looks like. Junk bonds up and to the right. These traders would be out of this positioning like over here in September where we gapped down and started moving below the moving average. The moving averages were down and to the right. They were peaking actually prior to. We had a lower high. August, September, we had a lower high and the markets turned down. Now, remember, the markets peaked in July and yields, junk bonds kept going sideways. So we didn't have a really good signal here until September where this turned down and we made that low into the October low. Right now, pretty clear signal that this is super bullish. Risk on. Same thing with IBB. IBB is a risky asset class. Biotechs are very risky. People who think the markets are going to pull back dramatically would not be buying IBB. That goes for IWM too, although that's kind of flat. Bitcoin, you've already seen a little bit of selling in the Bitcoin, so that's kind of risk off. We're about a third of the way back into Monday's candle. Monday was a pretty big sell-off on Bitcoin. Also, you got advanced decline moving higher and the 10-year moving lower. So most of these signals are bullish. You only have one IWM that's flat to neutral. And the S&P is pulling back a little bit right now. So this is like a swing time frame. Days and weeks look bullish, risk on. Intraday is another story. We're just fading from the high after a big push up to 465. 465 is where the call wall was, if you recall, yesterday. Okay, so that's that. What else do we want to look at? That's risk on. Let's go take a look at the S&P 500. Let's do that. S&P 500. S&P 500. Okay, I got to adjust this chart anyway. Okay. So RSI is showing muscle. So that's telling you the strength of this trend. Just go with the strength for now, even though we're fading a bit. We have a higher high. Looks like a higher. It's about the same, right? I'm looking at RSI. We're above 4,600. That's where the call wall was. Now the call wall is shifted to 4,700. So they lifted the ceiling. Stochastics turn back up is embedded now. All right, so this is 35 points now. Let me put that there. About 35 points a day. 36 and dropping. All right, so the ranges are contracting. Stochastics embedded. Volumes look good this week. 4650. Okay, that JP Morgan collar. The short strike calls are 45.15. We're way in the money. 45.15. 40.55 long put. So they were wrong on this one. We're up more than 13% from the late October low. RSI is still showing strength of trend. Huh. Interesting. Notice all this volume over here on the left too. Volume by price, support below. We definitely want to stay above 4,600. Below 4,600 would be risk off. That's the 9 EMA right there. Okay, so bullish above 4,600. Bearish below. We're up like 13.5% from the October low, so that looks good. All right, I'm going to take a couple of minute break. I'm not going anywhere. It's 12 o'clock. I'm going to listen to the judge and everybody else that has to say something on CNBC. I'll be here with you. Blah, 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 blah.
Jay Powell was even remotely going to say, we're going to start cutting rates in March.
And so I think the market has definitely a lot of stocks have priced in, especially like mid cap and small cap growth stocks have priced into that. But what I'm looking forward to is just like not talking about the Fed and being excited about the market because earnings are getting better or margins are getting better versus everything's being priced into the year-end price target of the S&P is based on the Fed doing X, Y, and Z. That's just not healthy. And so I want to see go back to talking about earnings growth, companies doing well, and less about the Fed, because I still think that's going to put a ceiling on stocks as long as the Fed is an active participant. I do not think they'll be participating in rate cuts anytime soon unless an event occurs, which all bets are off at that point.
All right, well, I mean, we'll see if you get your wish. I'm going to get to Weiss and Surratt in just a minute, but let's bring in our senior economics correspondent, Steve Weissman, because he's got a finite period of time here before he's got to really get ready for what happens later this afternoon. So, Steve, I mean, you posted on Threads today, essentially, if the Fed is as data dependent as Bryn suggests they are, then they should be thinking about cuts at this point because inflation, as you said, your words, is falling everywhere.
Yeah, except for in the CPI. And even if you look, I'm especially interested in the CPI ex shelter because that shelter component of the CPI is pretty lousy. And if you look at some of the data we had today, some of the data in Zillow, some other data from the BLS or the Cleveland Fed, rents are coming down. But if you take out rent from the CPI, the Fed is below its forecast, and the other rent data shows that rents are falling. So my concern is that a data-dependent Fed is making decisions based upon bad or at least outmoded data. I agree with what you said to Joe, though. I think Joe's question is a good one. There is time for the market and the Fed to come together. If you look at where those cuts are, kind of in May, maybe a little bit in March, depends on where it is. But over the next several months, look, I think a question for today, Joe's is a good one. I'm not saying it's a bad one. I don't mean to diss his question, but hey, you've been on hold for 4 months. If you don't hike today, you're going to be on hold through January. That'll be 6 months. Is it fair to say you've reached a sufficiently restrictive level? The thing about Joe's question, which is a good one, I think I said that already, is it skips a step. They've got to be in neutral before they can cut, and they've not even declared their neutrality yet as to raising rates. He can keep holding out this idea that we could be hiking still. So I think he's got to declare neutral before he starts to declare cuts.
He's going to have to be careful the way that he answers, questions from you and the other journalists in the room. Part of me wonders, I know this is far-fetched, I'll raise it anyway, whether he joins Waller in any way in saying the quiet part out loud, as you so perfectly put it, when Mr. Waller said what he did, or if he goes out of his way to push back on the notion, which would seem a little silly, to be honest with you, given what happened with the PPI today and what you just laid out for the inflation picture and where it's trending and the lags that exist there that you think will work in the favor of the Fed and everybody else.
Yeah, well, if he's not prepared for that question, he needs a new PR team, Scott. That is not a far-fetched question. The Fed governor said it. He's a respected economist, an respected monetary policy expert. The Treasury Secretary said it. And it's just one of those things that's true. So he's going to have to answer that question today. As inflation comes down, will you have to cut necessarily? There's another sort of related question there, Scott, which has to do with the idea that are you more or less tight than you thought you were going to be or needed to be? Because as you see, Scott, inflation is coming in so far this year below the Fed's own expectation, which means the Fed is essentially tighter than they had planned they were going to be on a real or inflation-adjusted basis. So that's another reason for cutting. The other thing out there, which I think is the market's ace in the hole that we talked about a couple days ago, is the idea that the base effects are going to help. There's two big numbers in January and February from last year that are going to drop out of the calculation, a couple 04s in there. The other thing that's happening today, Scott, I think you might have heard
Walmart.
about this, is that people are dropping their outlook for the PCE forecast next week because of what was in today's PPI.
Yeah, absolutely. I mean, let's be fair, too. The economy is also stronger than it, at this point, than the Fed expected it to be. So it cuts both ways. They've gotten their kind of outlook for inflation a little
But
bit
not the
offside,
economic, yeah.
and the economic one a little bit too. Steve, I'm going to let you run. I'm going to kick it around with the committee. I know you got to get ready for the big event, which I'll see you on the other side of. Right. And I look forward to doing that, Steve Leisman. So, Steve Weiss, what about what Leisman was saying and what the risks may be to what the Fed chair does? I mean, the data seems to be kind of undeniable at this point where it's heading.
Well, the data today was undeniable. PPI clearly is weakening, which is good. CPI, it was a different story. It was sort of okay. The question is there enough in those two reports to get Powell to say something that he hasn't been saying before? So, but I look at, regardless of what he says, regardless of how he answers the questions or his opening comments, you've got to look at the dot plot. And right now, the dot plot is calling for 2 cuts back half of next year, and then 5 cuts in 24. So in 25. So does that get pulled forward? Does it get increased in terms of the cuts for next year or not? That's really going to tell the story.
What if it all comes down to one question in the news conference and one question only? Mr. Chairman, Fed Governor Waller suggested that if inflation continues to come down in the way it is, then we'll cut. Now, I'm paraphrasing, obviously. How he answers that question, I could make the argument, is everything today. And the only thing, because it's going to lead you to believe that he is on that page, that he himself is thinking about cutting because he believes that inflation is going to come down towards target. And if he pushes back on it, you'll say, well, I don't know.
So what he would say to that, he's asked that question, it's a good
He
question,
asked it in some
and an
form by
obvious
somebody.
question exactly to ask. He would say, we're reviewing, we're going to review the data as it comes in. We've got a couple of good data points, and we do see some slowing in the economy. So we will look at the data as it comes in revised. He may come out and say, and what would be changing, game changing in terms of the market for the rest of the month is if he removes that comment that we could still hike, right? There may be another hike. So that's going to be the only phrase you should be looking for, because everything else is just really him massaging the dialogue. That and the dot plots.
Sarat, I mean, the market's done a lot since the last Fed meeting. These are good points to make, I think, at this juncture. Whether you want to take this as financial conditions have eased because rates have come down so much, the 10-year, and stocks have rallied so much. The S&P is like near 10% since the Fed meeting in November, the best intra-meeting period since August of 2009. Thank you to Spoke for that stat today. The rally has a lot since the last meeting.
All right, so Walmart, nice little turn in Walmart. Four wicks down at this point, back above 151. This is the low over here, 151. 152 was the lows back in June, July. Let's look at the weekly. I have a credit spread on Walmart with a stop if it takes out 150. Okay. All right, there goes Broadcom starting to turn. All right, Broadcom getting bought here. I don't know if you bought a position yet, but this was a good entry. ABCD pattern on Broadcom. If you don't know what I'm talking about, we look for ABCD patterns during the trading day. Okay, we look for ABCD patterns. The A leg is the morning rush into 11 o'clock, 12 o'clock. A lot of times we'll see that rush culminate around 12 o'clock. Traders take profits. Some people trading on the West Coast, they get up at 6:30 to trade this 9:30 open. Maybe they trade for an hour or so before they go to work. You get this run up in the stock. As you can see with Broadcom, runs up. There's a B pivot. You get the high. You get a low below VWAP. Now we're moving back above VWAP. The only thing we don't have at the moment is we don't see a lot of volume, but we're looking for that ABCD pattern. It happens very often just by nature of the way people trade. The fastest move in the market is usually the first few hours of the trading day. You get a peak, people take profits, they take lunch, people go to work on the West Coast after getting up at 6:30 to trade, the 9:30 open here on the East Coast, pulls back when they're taking profits. In an otherwise bullish looking stock, AVGO is bullish, got a lot of good news, putting together a partnership with Caltech. Look at that volume, explosive volume, 5 days in a row, well above average volume, indicating that institutions are buyers. Institutions will buy at times. They will buy high and sell much higher if they think this is going to perhaps split. Frano had mentioned there's a possibility, some people discussing a possibility of a split, 20 for 1, something like that. Tesla, looks like Tesla's getting bought. It looks like dip buyers are showing up on Tesla. Okay, so looks like a pretty good risk reward here, Tesla. Tesla, if it starts to move, no position here. Watching Tesla for the reversal. Maybe this risk reward here is compelling enough for people to jump in. Tesla. Okay, watch Tesla here. See if this gets going. Stop underneath this level right here. 220, was that 229-ish? 229.50. What's the low right there? 228.20. So 228. $2 stop. Can you see $4 upside? 230. Yeah, we could see $4 upside. Yeah, definitely. Tesla opportunity. Knocks once or twice. I don't know. It looks like it's still in a downtrend, so I don't know. I might pass on that. Looks good though. If you like mean reversion, this looks like it's going to revert back to VWAP at least. What about a credit spread? I got shaken out of a credit spread twice already in the last 2 weeks. Volatility, let's see. Tesla, let's see what the implied vol is. Tesla. On a buy signal, Tesla. I'd like to see a little bit more though. All right, Tesla on the daily time frame. Actually, it's a 15 minutes. Sorry, misspoke. Tesla, just looking at different time frames here. 30-minute time frame is still on a sell. Hourly still on a sell. Got 46% on the IB, Tesla. Let's see, 1029. Okay, let's hash this out here, Tesla. All right, Tesla's turning the corner. Let me see where we could go, Tesla. Okay, so the 200 period is at 225. Let me look at selling at 225 or below that. 220. Let's see what the 220 looks like. For the puts for December 29th, 220. Going once, 220 is at $3.70. Applied volatility 42. Delta is too high. Delta's at 30. So let's go down to 210. That's a 16 delta. So 84% probability of a winning trade, 16% that it won't, 16% probability that the stock will pull back against you. But it has implied vol of 44 and a theta of 15 cents per day. That looks pretty compelling. We'll sell. No, I want to sell that, not buy it. I want to sell a put, the 210, sell the 210, and buy. Let's see what the 205 looks like. 205. That's not enough. Let's go $10 wide. Buy the 200. All right, so that's 90 cents per contract. I'd like to get that to a little over $100 per contract. Credit spread. Sell the 210. Buy the 200. Or a net credit of 90 cents. Puts. 210, 200, 210, sell the 210, 210 for $12.29. What about the first week of January? It's a little bit beefier, right? Sell. What? Okay, we're fading a little bit more. 210, 54%. Vol is 47, Delta's 22. That's a little bit higher. All right, I'll just go 12.29. 210, 200. Oh, those are calls. Damn it, Janet. 12.29. 210, sell the 210. Buy the 200. Net credit, $90. Oh, that's pretty, huh? Yeah, that's not quite what I like. I want to go to the January 5th. January 5th. 210, 205. All right, looks like we're going to drift a bit lower, so you might want to wait on any entries that might be pulled back with the index if we don't bounce yet. Just watching Tesla for a change in direction. Still below VWAP, so we're still a bearish sentiment.
Directionally, that's direction it's going. So whether it gets to 500 or 600, in my view, the stocks can go up. Look, people talk about Microsoft's expensive, but if you take a look at Microsoft on a trailing 12 basis, the stocks where it was on that valuation over the last 2 years. So going back to the complete free money time, the valuation is the same. Now you could say, well, okay, that was free money, maybe it should come down. But when you take a look at the products that they have, that Truist references, and that has yet to really pay dividends in terms of new subscriptions. They have raised some prices, but to me, this is just a recurring revenue story with significant pricing power and significant products in the offing. So I believe that this continues to be the number one technology company actually in the entire market.
Joe, are we going to have any dispersion between the Mag 7 in 2024? This is a year when everything went up. I've heard people raise the case, well, not all of the Mag 7 stocks are going to, be the kinds of winners they were in calendar year 2023. But yet I see call after call after call of
Okay.
various firms all talking about the same stocks you've been talking about all year. So we just mentioned a 3-year price target of $600 on Microsoft. JP Morgan naming Amazon and Alphabet top 2024 picks. There's all sorts of optimism around. The Metas of the world, and Apple is now back above $3 trillion in market cap. It's had a resurgence of momentum behind it too.
Yeah, I mean, first of all, hearing the Microsoft price target, you think to yourself, forget about a $4 trillion company, we're going to see a $5 trillion company. I mean, that just seems, this seems as though once we got through a trillion and then 2 trillion, there's no more ceiling. But I do think there's.
All right, looks like Tesla wants to push higher.
Amongst the mega caps. You saw that clearly this year with Meta.
Okay, Walmart
Performing significantly. I think Alphabet and Apple actually
turning the corner. Walmart, I'd say Walmart's turning the corner. VWAP up and to the right. Volume is pretty high. Looks good.
Decision that came out, on their services, which is about $12 billion in operating income, and how that impacts Apple, which had positive decision expected. I don't know how that turns out. Then you have the antitrust concerns, and they've always stated, all the companies except Microsoft years ago, have always stated past that. I don't know. At some point, it's like Don, like Gotti. I mean, is it going to be the Teflon tech trade still? So that's where I have concerns.
I mean, the catalyst also could be with Alphabet. I like Alphabet is you take YouTube out, but you can actually break up these companies too, and then you get a complete sum of the parts. So there is that upside on that too.
Okay, we're going to come back. We'll do some calls of the day. I got several stocks.
Okay, Walmart's still going. I'd say Walmart's turned the corner, at least for the last couple of days. Walmart. Tesla. Can I help you? What do you need? Cat. Got quite attached to these cats. I don't know if anybody's a cat person. I wouldn't consider myself a cat person. I've never really gotten into cats. I've had girlfriends that have had cats, but my daughter decided she had to have 2 cats, and I tell you what, these 2 are constantly. They have little those little beds you buy at TJ Maxx. Got the little beds in the corner. They come up here and hang out because it's nice and quiet in my office, completely removed from the house. So they stay away from. My wife is Russian. She's always yelling, so they like to stay away. They're constantly hanging out, so yeah, they're keep me company.
The target is $49, growing audience platform, not just gaming, untapped advertising opportunities. What do you say? We don't talk about this stock all that often.
Yeah, it's done, it's done really well. It's up about 40%, 45% year to date. Obviously, had a terrible 2022. What you need from Roblox, I think a lot of people know the story. It's a sticky platform, growing users. But really what you want to see is that free cash flow stop being so volatile. Last quarter, the free cash flow was around 59 million. The quarter before,
What is Target doing? Let's take a look at Target and Costco. Target and Costco. Target's still hanging out above the 200-day. Costco was packed yesterday. Costco.
I really like the name. I like Dave Suzuki, the founder CEO. But above 50, I think you have to be consistently free cash flow positive.
Sherrod, Uber, this stock has been on a run, okay? JP Morgan names it now its top pick, target to 76 from 62. We've had, I think Jenny has trimmed a little bit. I think Josh Brown trimmed a tiny bit because the stock's been just on this run. What about you?
Same. I'm going to start trimming it. I'm probably going to trim it in the early part of the year just for tax reasons. For us, it's done everything we wanted. Momentum investors like Joe are in it now. So basically, they have to execute. And if they have one misstep, that stock's going to be back to the 40s. So I want to take some off the table only because it's become too big a position. And I'll bring them back to a normal size.
Did you not like that? I have to correct Sherrod on this one. I saw your face. That's actually not why I bought Uber. I bought Uber at 36. Okay. But let me explain why. I bought Uber at 36, and I really bought it on the belief that they are mobility. They reached this moment where they have the inflection point on the balance sheet. They got the balance sheet in a much better place, and they signaled that we are your mobility. We're going to live through whatever it is that you want.
Oh boy. Tesla bouncing.
It just grows in terms of what your overall portfolio is. But I still think
Okay, I'd like to see Tesla catch a bid now.
I think it can go into the 70s easily.
There's a catalyst there with the freight business to see what they're going to do with that because that's money losing. And they're trying to get out of all their money losing businesses. You're not going to stay in that. That business is too tough for them. Call your money to have
He owns it too.
I did trim a little.
Yeah, that seems to be what many are doing with around the show. What about D.R. Horton, Joe? Which you own? Is it so? It gets an upgrade today, but these stocks have been trading around all-time highs. The builders have. Is it too late to get now all pulled up on builders like this? Upgraded to outperform. I always say I don't use valuation as a guide to where stocks are going, so I'm not going to fall back and say these are cheap stocks. Let's see what the stocks done year to date. Obviously, put that up, please, in the control room. They obviously are cheap stocks, but what I will say
Okay, we'll continue to fade.
now is residential real estate.
Just looks like some rotation. Consumer staples catching a bid. Excuse me. You can't open that yourself. You don't have hands. You eat too many of those treats, you're not going to fit in those jeans. All right, VIX grinding a bit higher. Going into the Fed, we got an hour and a half to go, hour and 28 minutes.
These companies are going to benefit. So I do think there's further upside. It has to be one of the most counterintuitive trades and moves of the entire year, right? I mean, you come into the year, you're like, the housing market's completely frozen. Mortgage rates hit as high as like 8%. Obviously, anything housing related is not going to do well, especially when it comes to builders. But then you're up 50-some% and bigger gains than that for all-time highs in the entire space.
It's consistent with what's happened with rates then, with them coming down. So that's what the proxy effect will be. I don't view these cheap. 10 times is cheap relative to the market. But 10 times sort of where these things are sold at forever. So on a relative basis, is the market they're cheap on a relative basis to the sector? They're not. They're fairly valuable. So real quick, Thermo Fisher outperformed Wells 575 target. You own it. Fabulous company. They had all the pull in for COVID. Now they're going to actually have some earnings expansion. I think you want to own the stock. They are one of the premier players out there. 500 even. All right, let's get the headlines now. Christina, question number one. Hi, Christina.
All right, so let's get a bid here now. Let's get a bid. On the dip here, it wouldn't be a bad idea to take some calls. And if it gets back up to the highs again, you can buy some puts and then hold on to basically a strangle going into the Fed if you want to do that. I'm going to pass. Goose. Stop. Trying to open a box with her teeth. Okay. All right. Give me 5 minutes or a couple of minutes. Let me go give these cats some food. I'll be right back.
Drink company Empirical to launch Doritos flavored alcohol called Nacho Cheese Spirit. The company said the drink was made using real chips and extracting their essence. Not your ordinary booze. Scott.
All right. I appreciate you thinking of me with that one. Christina, thank you. We'll see you later. Christina Partsinevelos. Up next, gold. It's ticking higher ahead of today's Fed decision. Now the desk is going to debate if it is a good bet for your portfolio. We're back right after this. We're back. Bank of America today says bet on gold stocks into 2024. They're bullish into the summer. Joe, you own gold. You own the GLD.
Yeah, and
You like this call?
I'm going to continue to own this. I think it's almost as if it's got a degree of insurance in place for further economic contraction and the disinflation
that we're seeing both present here in the U.S. and accelerating in Europe and Asia, really intensifying in 2024. So I'm going to maintain the position. I think it's the right position to have because that's the economic climate in which gold generally works best. Brad, are you playing gold at all?
Not right now. We haven't been in it in a couple of years. I think that you have to just own it if you're going to own it. Because look what happened with gold when yields went down. It just went parabolic and then it kind of petered out. So I just think it's like there's 10 different reasons why gold should rally or not rally, and it tends to do none of the above. But I think that central banks are buying a lot more gold. You can say geopolitical uncertainty own gold. We just own other commodities right now, but I totally understand the short and long-term reasons to buy gold. And don't forget, as I said, central banks are buying a lot of gold right now.
I mean, they are bullish on Newmont, is Bank of America. In terms of mining stocks, Weiss, if you want to just pivot, everybody on the show today owns Freeport.
Yeah.
Why is that a stock of choice right now?
It's stock of choice because it's easy to understand the supply-demand characteristics. Pure and simple. You know what supply is coming on, and the answer is not much, if any, aside from some more efficiencies. But you see the demand equation. So it's actually another way to play housing, which is a cheap way to play it. It's another way to play commercial construction, but it's also the way to play EVs. Now, EVs, in my view, continue to disappoint. So that may keep a lid in the stock because a lot of people are in it for that reason. So we'll wait to see. But I look at, for me, in case I'm wrong in the economy softening and the economy reaccelerates, this should work. In case I'm wrong in China, China is a wild card here, and their economy continues to atrophy. So if they reaccelerate, which I don't see anytime soon, then this takes off. So right now it's going to trade 35 to 40.
All right, we'll do a quick break. Mike Santoli on the other side with his midday word. We're back right after this.
I agree.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, so waiting for the Fed will continue to fade. A lot of the defensive names, I would consider Walmart one of those. A lot of the defensive names moving higher. I don't know. I just have a feeling this isn't going to be a big deal. Pretty much going to be the same old Jay Powell. My thinking was, and still is, coming into the inflation picture, the Fed was behind the 8 ball. Transitory. 6 months. I don't know how much. 6-8 months later, they finally realized that all that cash infused into the system created inflation. The money supply. Milton Friedman. Anyway, and now he is probably going to be late. But I don't think it's a big problem. The markets continue to work out. People are still employed. Obviously, that's all going to change, Vinny, in next year. It could be. But people have been talking about everything changing as early as January last year, or this year rather, January this year. People were saying that wait till the Fed raises rates again. You'll see the markets are going to pull back. Yet the markets rallied. Inflation is going to be a problem. Supply chain was the big problem during 2020, into 2021, into 2022. High interest rates, housing market would fall apart, but yet there's still a lack of inventory. Rates are coming down. When I bought my first house after I got married, we needed a house. We needed family. I bought my first condo back in 87, 87. Interest rates were 8%. Of course, I was an up and coming rock star in my mind, so I really wasn't paying attention to rates and how it would affect my cash flow. Of course, I was single, so it didn't really matter. So it was a lot of people like me. I don't know. Yeah, 8% does slow things down, but let's take a look at housing. Let's look at XHB. Is housing pulling back? It is today. It is today. Almost a bearish engulfing. If you just look at the body, bearish engulfing. It's definitely a bearish looking candle. XHB. Let's see nail NAIL. I see a lot of people shopping, and they have bags in their hands. They're not exactly just looking. When I checked out TJ Maxx, I've been to TJ Maxx maybe a half dozen times in the last 2 weeks. Target. People are spending. Five Below was really something else. They have a new store in the mall, in the mall by us, Five Below. And I picked up a few things. I mean, a $5 game that looked really good. It was a Clue type of family game. We'll be playing that over the holidays. $5. A lot of things that my daughter had to buy for her friends for, Christmas presents, Christmas party. We were in the mall. A lot of people there. It was on a Sunday to boot. It was pretty busy. Didn't want to go there on Saturday because it was a madhouse. What's Route 17, Route 4 like, Mondo, near Garden State? Is it busy? Have you been by there? You probably don't want to go near Garden State Parkway.
We've rallied off of a fair market low. The stock market does that when it deems that there's a reason to do that. And in this case, it's okay. The economy's better than we thought to this point, and the Fed. Yeah. Inflation's lower than we thought at this point, and the Fed. Yeah. So let's see what happens now.
It fits together. You can definitely argue if 19 plus times earnings is the right number and whether you want to adjust that and whether in fact parts of the market have properly priced in some slowdown risk or not. But no, I agree in general that there hasn't been anything.
Yeah, let's see what Mondo has to say. Is he in the room?
We need to wait until we get, some talk about earnings and the numbers come in to see if we're upside or just about right.
No, exactly. And look, again, we've had these periods where the market just sort of winds itself higher into the end of the year and volatility is so low. And then you get maybe the early year rush in January. And then something really knocks over the apple cart because it just got too one-sided. But I'm not sure if we're there.
We'll see what we do a couple hours from now. Mike, thanks. Mike Santelli, our senior markets commentator. We come back. We are going to trade the all-time high club. A bunch of names hitting new records in today's session. Got some ownership on the desk. We'll play it next.
Okay. North Jersey, the intersection of Route 4 and 17 is where there's a big mall there in the, the southwest quadrant. Place is always so busy. Route 4 is like nuts in North Jersey as far as traffic, all the retail up and down, and people drive like crazy. New Jersey, New York drivers, the worst. They all moved down here, and it must be making these Southerners crazy because the way people drive in New Jersey is completely different than here in Myrtle Beach. People will drive 45 miles an hour in a 55-mile-an-hour zone in the left lane. It makes me nuts. All right, we're still watching the markets drift lower. I'm not expecting much to do between now and 2 o'clock, so you can sit on your hands, go have lunch, whatever, come back 10 minutes before FOMC. Got a few things in the hopper, watching watching the bounce in Microsoft, looking for a bounce in Broadcom. Tesla continues to make higher highs and higher lows. Netflix off the best levels of the session. It's about $2.30 off the high. Netflix, Nvidia drifted a bit lower. Apple, no follow through. It was higher earlier. Yeah, I figure. Okay. Old Japan or just Japan? Same. Oh, right. For the tolls and stuff, congestion pricing. Yeah. Yeah, I like Nyack. Nyack's my favorite little town there on the Hudson. All right, so we're starting to see a little bit more short covering. Costco, yeah, looks good.
Booking Holdings, Chipotle, Ross, Costco, KLAC, Palo Alto, and Synopsys. All right. 3 names stand out to me because they've been in the quality momentum.
Look at Weiss over there grinning.
All 3 companies hit the mark on earnings consistently throughout the period of the last 3 years, and momentum has taken hold. Palo Alto is a more recent ad. You know my feelings on cybersecurity. Chipotle, we've had that in there since April of 2021. The one that surprises me is Booking Holdings. I was suspicious about the performance for Booking Holdings because of the exposure to the Middle East. And you saw
All right, Tesla. I see Jason saying that into the dip, there was a shitload of options. Put sold.
I take back my criticism of you, Weiss. Let me move to criticize you. Feels better doing that anyway. You don't own any of these. Yeah, that must be a typo. Why?
Yeah, that's true. Yeah, I don't like. Plus, you get robbed.
I don't. I used to own Visa. I thought it got expensive, so I sold it. That was a while ago. Why no Costco? No Palo Alto. Expensive. I think expensive. Ditto with Palo Alto. I don't Palo Alto. Palo Alto makes some good dough in it, but I don't think they're cheap. So I don't own them. So I'm on the jet too. I own the and I have a lot of exposure there, including to the other 450 stocks you own. So we are going to take a break. We'll come back with that. We're going to just set up to Adobe's because they report in OT. We're back after this.
Yeah, remember that attorney at Short Hills, Mondo, lost his life. Three guys robbed him and his family. He walked back to his Range Rover, parked in the parking structure at Short Hills. That was about what, 5, 6 years ago? Yeah. All right. Just watching the watching the markets at the moment. A lot of range bound actions, good for credit sellers. Just chewing up theta. Okay, Broadcom looking forward to get back in the saddle. All right, the FANG stocks are mixed at the moment. Um,
What's the setup, Joe? Adobe reports in OT.
Setup on Adobe.
Yeah, Steve makes me laugh sometimes. I apologize.
I was 2018.
Firefly, when is it going to be monetized?
Yeah, so it was 5 years ago.
Conservative guidance might be what holds back the stock from advancing to the November of 2021 high at 699. Bryn, you say you wish you owned it.
Yeah, if you actually go back decades, most stocks don't even outperform the 90-day T-bill, much less the S&P. Adobe, Costco, there's a few names. Adobe has recurring revenue. To Joe's point, they're in the thick of AI, which they will monetize. And so they have this flywheel that I think they'll continue to be a winner. I own the Qs, so yes, and it's in the top 10, so I own it. But I would love to have owned this name years ago.
All right, finals right after this break.
Yeah, I don't like going to the mall, especially with the kids, unless, it's got to be in the middle of the day. Excuse me. Yep. Yeah, watch Tesla's starting to motor higher. Tesla, Apple, motor. Tesla and Apple starting to turn. All right, I sold a credit spread on Tesla. Sold a credit spread on that one. Sold one on Walmart yesterday, right as it turned. It turned out to be a nice trade setup. Tesla starting to turn. Excuse me. Sorry, I keep clearing my throat in your ear. I don't even realize I'm doing it. 210, 205. All right. 210, 205 on Tesla is what I decided to go with.
Fed chair finishes with the news conference. Jeffrey Gundlach of Double Line is going to join us in a CNBC exclusive. It's our last visit of the year. Very much looking forward to what he has to say about what might happen today and what could happen next, most importantly. So we'll see at 3 o'clock this afternoon. Josh Brown, Liz Young with me too. Bryn, what's your final trade?
OILK. It tracks the front month oil futures contract. It's a trade only. If it doesn't work out in the next month, sell it. It's K1 free. I think oil is a technical support, so we get a nice bounce over the next few weeks.
Thank you, Steve Weiss.
Amex, I think we're going to see much more spending from the millennials going to help us.
All right. So it's in honor of my good friend Stephen Weiss, Eli Lilly. So we got the S&P.
All right.
NASDAQ are higher. Yields, they fell today, all leading up to what happens in just a little bit. The exchange right now.
Thank you, Scott.
Yeah. I don't want to hear any more politics. CNBC, it's like, why do we have to keep hearing about politics? That's all they seem to do when it's not the halftime report or evening when Melissa comes on with Guy Adami and that crew. Okay, sorry. Five Below. What other retailers? Let's see. Dollar General. A little bounce on Dollar General, just above the 50-day. This might start to turn. The rule of thumb for me is once you see a bullish day after a pullback, I look for the next day to be bullish again. If it is, then that gives me the opportunity to follow through, and I put a stop underneath the previous day low. In this case, it would be below today's candle. If we get a bullish candle tomorrow. Okay, Target is sitting above the 200-day. So Target, kind of a same mentality or mindset. Once we start to see the 200-day hold, you got the 90-MA crossing up through the 200-day. The 21-day will cross up soon. Once we see this consolidate and start to break out above 137, that'll tell me it's time to get long. For now, it's just consolidating. Costco, just trending. Costco. Okay, same thought over here on Costco when it made this reversal. Okay, the first day that it turned is not the day that I want to take it long, or the second day, which turned out to be a doji. But the third day, in this case, when it becomes bullish and obvious that price action is starting to break higher and volume picks up, if you just study these kind of nuances, you're going to make yourself a better trader, a better investor. Okay. So let's look at another example. That's Costco. What about Meta? Meta. Okay, so a week ago, 2 weeks ago, actually, Friday, we were looking at some of these candles that were reversing at the 50-day, and we said we'd like to see the next bullish day. So we had a doji, a big body candle, and then boom, that big bullish day right there on Thursday was the reason to think long, put a stop underneath 317 or so. Look for the follow through, came back, but it didn't stop out. Followed through, got a little hanging man or shooting star. So we're looking for this to follow through. But if you just look at the nuances, not enough volume here on Meta, but it did look good. I took the credit spread off. Little things like that can make all the difference in your trading. Here's Apple. Let's take a look at Apple. Okay, Apple pulled back. Apple pulled back over here, created this hammer, which is a good reversal signal in its own right. First bullish day, it took out 193. Bearish day comes back in. Next bullish day. So we're still trying to get some sort of rhythm going like we had over here where there was nothing but buyers going into November. All right, that's Apple. What about Broadcom? Broadcom, for the previous few weeks, we've been talking about how Broadcom would be up one day, 20 points, down 20 points. Then it bounced right here at the 50-day. First bullish day, you probably want to, take a smaller risk reward. Second bullish day, that was Friday. Following through. If you took the long on Friday, you woke up and was surprised on Monday for that big gap up and a rally. We were up like 95 points. Yesterday, we were up, 30, 40 points, 47 points, I think, at one point. Today, looking for this to continue higher or flag. Look at the volume. That's institutions piling in. They don't have a problem buying high and selling higher.
This is really, I believe, personally, this and other things is why Tesla carries such a premium to its peers. If this technology is so far away, that's disappointing for, investors. They're not just buying a company that builds electric vehicles. They're buying a company that builds batteries, that has software that's cutting edge and pushing this whole.
All right, it's still fading. All right, you probably want to take some lunch now because we're probably going to fade into the Fed and see what they have to say. Reducing your exposure always a good idea. If you're too over your skis, if you're too far over your skis, you might want to take some off. Reduce your exposure. Once the Fed's done and we can see what the markets are thinking, price action, we can get back in. Or maybe you want to wait. Let's take a look at TRBCX. TRBCX. I did reduce my exposure in TRBCX last week. And looks like we're just going to keep going. Okay, the idea is that we could get over here to 170. If we get to 170, that's a 70% gain from the October, November, December lows last year, end of year. That's pretty amazing that we've made it as far as we have. But the markets have been very bullish. Let's see, the Dow Jones, INDU, Dow Jones. All right, this is week number 7 off of the reversal. Volume looking good. I would be surprised if I didn't start to see some profit taking into this strength.
It's also getting some love from analysts, as it often does.
It does. And talk about a hefty price target hike. We did see today Truist start covered with a buy $600 price target there, which is optimistic. It implies about a 60% upside from where we closed on Tuesday session. However, I think this is so important to note. This is a 3-year price target, not a 12-month price target. So that puts things into context a little bit. They believe Microsoft can grow their revenue and free cash flow.
JP Morgan, higher highs, higher lows, VWAP up and to the right, JP Morgan. Breaking out, JP Morgan. $162.81 was the previous high in 2021. We're only $2.40 to go on JP Morgan. Okay, what does Goldman Sachs look like? Goldman Sachs wasn't doing as well. It's still below these highs. Wells Fargo, I have a position in. That's doing well. Trying to break above this 48 level. If it does, then 57 looks like the next level. 52 is the first stop right around this area. Pivot for resistance. ARM Holdings.
So another analyst news, TD Cowen with a price target of $46, outperform rating, bullish on their long-term story as they do see this as a category leader in the Mediterranean segment, and they do see encouraging new unit economics that could target just 1,000 plus U.S. stores, which is their goal by 2032. Now, this name did IPO back in June 15th at a price around $42 a share, so 46 would imply some optimism, but we rallied prior to today's rally, we almost doubled from where this company did just 1 month ago.
Yeah, got up almost to $60 a share. It's giving back a lot of that, but stabilizing here in the mid to upper 30s. We'll see if it lives up to the optimism given to it from TD Cowen with that outperform rating from $46 price target. 46 or 38 doesn't seem like a long way away, right from $8. We're talking about a 20% or a little bit more than rally in the stock. So certainly when you put in those percentage terms, a respectable price target if it was to hit that point.
Absolutely, yeah. And this name has, even with the business pressure we've seen, still been a pretty consistent player. Thinking about vehicles, if you're looking at some technical key example trades, stick around next time. We'll be right back.
Okay.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
All right, we'll continue to fade.
p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to look at our two uploaded stocks today. Tesla as well as Uber, both nice performers on the year, but we're starting off with Tesla, which is still pacing to beat the S&P's best performers in 2023. So Rick, seeing some weakness today, but walk us through the technical.
Yeah, and a stock that's up 126% on its yearly lows is worth noticing here. And even though we are down about 22% from those highs, we couldn't quite crack the 300 level. It's still very impressive gains during the past 52 weeks here. So now the current situation is we have been trending down from those highs. So we have a bit of a falling wedge type shape. With these two white lines may look like they're parallel at a glance, but they actually are converging toward each other. So falling wedge, two downward sloping trend lines converging toward each other. So typically regarded as being a little more of a bullish type of pattern here, but really what you'd be looking for in this situation is some kind of break beyond either of those two white lines. And what's happened really in the meantime is we've established
What's Tesla doing? Tesla trying to grow some legs here and push back above VWAP. Somebody took a big put position on Tesla. He's talking Tesla right now.
We had another test at that area. So now in the short term, we've got a bit of a range that we've established between about 226 and 247, this red line here. So those are some areas to watch in the near term. But the overall trend, kind of listless here. We're seeing our three moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages clustered together, trending sideways more than anything, which speaks to trend weakness, directionless here. Directionlessness, I guess I should say. And we did get some bearish signals, though. We crossed below our two shorter-term moving averages here. We're barely hanging on to our long-term purple 252-day. So that'll be a crucial point to watch as we head into the close. A close below a long-term moving average like that would be another bearish signal to keep an eye on here. So, definitely not some or anything like this here that we're seeing, but a little bit of softness, a little bit of weakness.
I know, I feel like when this name, we start to see this momentum unraveling, it's like the bears get extra loud, even though the shares are up, like you said. I mean, a substantial rally we've seen this year. But RSI, what are you seeing as far as momentum of this recent pressure?
Yeah, the Bears have had a tough go in this name here. And, I think probably you could even draw a horizontal line here, not necessarily even sloping downward here, because RSI did technically make new closing highs along with price a couple times here versus here. So the overall picture, though, has been one of slowing momentum. And that's kind of what I was trying to establish here with this downward sloping line.
Walmart still climbing. Walmart.
Here, price did make a higher close, but the RSI did trend downward. Then we had the situation of breaking below our 50 midline as well here. So that's the line that's
Elon Musk is planning a new university in Austin, starting off with STEM-focused primary and secondary schools. Wow, that's pretty interesting.
I'd be curious to see what happens if we get some kind of energetic reaction when that, or I shouldn't say when, if that does occur.
Right, and of course, the near 5% move to the downside we've seen.
That's pretty cool.
Are not exactly helping sentiment here, but as far as some levels you're keeping on your radar, walk us through what you're seeing.
Well, like I said,
Bitcoin, almost halfway back into Monday's drop, making a little progress. The good thing is that the This low has held around 40,135.
And we had some lows that came quite close as well. So this looks like a key area. If we were to break even lower beyond that, 214, this light green line, that represents where we had a high point here and a low point there. You look for these spots where price stops at the
Walmart continues to ramp higher.
find these important, potentially supported resistance levels. To the upside, the top of our range near 247 would be a mark to beat. If we were able to break above that trend line, that would be one area to watch here. But really, another key area.
SPY still fading. No one buying.
And then subsequent highs there are pinkish line there near 279 is an eventual upside point to watch.
Right, and a lot to always digest when it comes to Tesla. So now trading this name, Alex, I mean, when you look at where we've traded all year long, which is as low as like $102 a share roughly, almost to 300, we are still at the higher end of the range. So I guess for just example for purposes, say you were taking on a more bearish stand, walk us through what you're thinking.
Yeah, the reaction to the story today was bearish, but few names are more polarized than this one amongst market participants. You got the super bears, you got the super bulls. I look at a polarized type of a trade. This pay off big if there's some sort of
All right, I'm going to make some lunch. I'll be right back.
polarized and large in size. So the bears are being more galvanized and see downward trajectory ahead. Maybe this one will be interesting. We're up to January 19th, 2024, so that first month of expiration next year. Buying an out of the money put vertical, the 201.80 put vertical. So it's $20 wide, but we're only paying 10% of what the price at $2. So we're taking $200 in risk for a possible max profit, and it's 9 times greater at $1,800. Now they get to that point though, $180 in a relatively short amount of time. This expires next month. So it's a type of trade, Jenny, that probably is seen as lower probability. You can see that in the discrepancy between the max loss and the max profit. But if this were to occur where you have a massive downsized repricing, you might see a pretty sizable payoff on this type of a trade. So probably not one that I'm looking at all the time and all different types of trades, but polarized stock, polarized type of a trade, the one that has a risk reward that is interesting, where you're only risking 200 to make $1,800.
And I think that the bears will love this because this speaks to some of the momentum on that. Now, shifting gears, we're looking at Uber, another really strong name this year, I mean, even stronger than Tesla Uber year to date. This name has been in pretty much what feels like a straight shot to the upside for the last like 2 months.
It doesn't get much better than this if you're bullish. This is the kind of price action that really can just knock you back if you're not prepared for it here, because we're up about 42%. Just a blistering rally to the upside here. I mean, you couldn't really stop it here. It was unusual though, because we had a bit of slowdown in the middle here. You can see our trend line went from quite steep to still steep but less steep, and then accelerated once again, almost matching the slope of our first line here. Earnings propelled us to the upside, and then once we broke above some of these levels on our chart, things really come up. The 11-year 49 I thought was interesting here, because that was a mark that once we broke above it, we really started to see things pick up. This is the kind of thing you want to look for, is potential breakout spots, because you can get quite an energetic reaction. But overall, I mean, price is still far above our moving averages. They're all trending up, but potentially breaking below this quite steep trend line though. So we'll have to really see if that develops into the close here into some kind of breakdown.
Right, absolutely. So momentum, does it match this nice move to the upside we've seen?
You know, it's worsened a little bit since we've been on the air today. I looked at this chart a little earlier today, and we were not making new relative lows in the RSI. You can see here that we are now in the position where the RSI, while still overbought, is breaking below our previous lows as price breaks below our trend line here. So momentum still geared strongly to the upside here, but maybe faltering a little bit here, maybe slowing down after the sharp rally that we've seen. Look for a move below that 70 level for another bearish signal here. That would be a move out of the overbought area. That would be a sign of potential slowdown.
And this feels very normal, because I do think when you see an uptrend that's been consistently is over, it's natural to see some of this momentum start to ease. But now, as far as levels you're keeping on your radar, walk us through this seems difficult. Like you said, we are well above our 1500 in the capital now.
And that's why standard deviation channels can help us here. We draw our linear regression line, our line of best fit. Then when we take standard deviations above and below that, a piece of information is revealed that we didn't immediately see. It's like putting on a pair of glasses and you can see something farther away that you didn't notice before. We were at a resistance point. We've been bumping up against this resistance level right near 63. We failed to take it out 3 times. Or actually, this would be the 4th day in a row we failed to close above it here. So that's something worth noting. If we do get our act together and continue to climb to the upside, plus key channel comes in here 71.44. To the downside, we've got a low support confidence. We've got a point where we had a gap up and then a subsequent low near 57.87. Let's call it around 58 here. And then our moving average, our yellow 21-day comes in just above 57. So between like 57 and 58 would be a support here.
Right, all right. And 2 pretty strong charts when we look back at the entire year. Really there, appreciate the insight of this entire chart master. Not trading this name, Alex. Walk us through a more optimistic trade, just given the fact that this name has been, I know that Tesla's been an outperformer, but wow, what prices have we seen you there?
Yeah, JP Morgan hiking the price target as well. All-time high levels in this stock are 64.05. That was the level I keyed in on here for this trade illustration. As this particular example is targeting that 64 level. When did I buy a call diagonal? We went out to the January monthly, trying to stay ahead of the earnings release early next year. Buying the 60 call in that expiration. It's slightly in the money. Its thought here is to buy a little bit more delta, have this act a little bit more like stock. Of course, the only difference is you're not going to get dividends, got no voting rights, there's an expiration date, and that's not an exhaustive list. The differences between calls and stock shares, but the idea is theoretically to get similar exposure, so that's seeking to accomplish that. But we're also looking to sell out of the money call here. So this sometimes is referred to in trading circles as the poor man's covered call, because it costs a little bit less than the traditional covered call. The Jan 5th expiration selling the 64 against that 60 call in January monthlies, and it creates a diagonal spread, which we know from our conversations and discussions of these strategies. It looks like the counter spread tilted on its axis to remove some of that upside risk. So for $250, we're buying a strategy that peaks out at 64, which is right in line with that all-time record high. So while it's bullish, Jenny, the stock right now, of course, trading at 61.5 or thereabouts, down a little bit of upside, let's call it $2.5 or so to that mark. It was neutral as well. It would be fine if the stock was kind of hanging out likely into this area as well as the time decay could potentially start working for a trader deploying this kind of thing.
And I finally come to grips with the January expiration. Because 2024 is pretty much already here. We're pretty much at the end of this year, but we will leave it there. Now coming up next, another name that's been a pretty strong performer, that is Netflix, which is right now one of the best performer actually of the Magnificent Seven, up around 2.25% after releasing its full viewership data for the first time ever. We'll discuss that more in a second.
My dad was a hard worker. He used to do side jobs, installing radios, charging something like $100 a day. Another guy who charged $500. He just didn't want to do that. Proud of the prices charging. My dad instilled in me always put people before. Be proud of offering a good product that their friends. I think he'd be extremely proud.
All right, a little profit taking on Walmart. All right, going into FOMC, we're just sitting here watching the markets listless and fading at the moment. All right, we got about 30 minutes till the FOMC rate decision. Market's still fading, not much to do. Apple starting to move. Apple started moving about 11 o'clock or so, turning the corner. And then we faded again at 12:30. We started to see some buying. Now we're back above VWAP, Apple. All right, starting to see a little bit more short covering. Apple's breaking to the upside. All right, starting to turn the corner. A little bit of a short covering. Looks like a bear flag for now, though. Going into FOMC in about 25 minutes.
Yeah, if you look back to when all the madness of 2022 really kicked into gear, it's in the January quarter of the stocks around earnings. It really goes back to, I believe it's January 20th of 2022. This stock had closed just over or right around 510 a share. Actually, it looks like the closing price going into that earnings was 508.25 and a massive gap lower, and it's never sealed that gap. So, technicians talk a lot about sealing gaps. Well, that seems like a pretty critical one to do so. I don't know that it will happen, but if you're an investor or a trader who thinks it may happen in a hurry to sell down a really tough 2023. Maybe take that optimistic beginning of 2024 and look for a steal of that gap. Buying a 5-10 call calendar, going out to the January 12th expiration. This is intentional, staying ahead of that earnings event that's slated for the next week in January of 24, and then selling the end of this year, December 29th, 2023, 5-10 calls again. So $2 debit, so it's a $200 risk on this one. And as we know with calendar puts, the closer you are to that strike, the better. So in this case, looking for a seal that gap right to around 508, 510, right in the wheelhouse of this particular strategy's risk profile.
Yeah, definitely giving us some insight here real time. I think also just that about earnings season we just gave us. I think we approached the Fed and nerves right after we're about 24 minutes into that announcement. But now to shift gears here and look at a developing story that's helping kind of bring media markets correspondent for the network, Kevin. We talked Tesla earlier in the show. We're somewhat circling back, but this time a different one of Elon Musk's company as its valuation continues to climb up year to date, $78 billion. I mean, walk us through the story because SpaceX to me is so fascinating.
It is definitely, yes. We continue to see some chatter here, especially when it comes to some of the reports that the price for SpaceX
Still looks like a bear flag. Apple at the highs, starting to come in a little bit.
per share. Previously, we closed at $95 per share, so that does bring that valuation up to around $180 billion. Now, very interesting sort of developments, especially as far as concept of this off-road business now on the table. It's going to be between 500 million and 750 million, and it's really going to be returning towards its goal of CEO making potentially younger. But we know that SpaceX has been able to hit the pinnacle of coming to the space industry by utilizing their commercial rockets, especially reusable rockets, and they've had over 90 successful launches of Falcon 9. At this point in time, they also have Starlink developed and now has over 2 billion users. So a lot of value is added for this particular company and continues to stay on the sector for now. And we'll see, ultimately, really how it fits in the IPO. That would be very, very exciting to say the least. Do we ever see any reaction within Tesla stock here, Kev? I mean, we don't have any way to really express sentiment in SpaceX, but given the leadership overlap, is there any reactions and things like Tesla, particularly to news in SpaceX? I haven't seen any type of direct correlation. Maybe you might see a little bit of pop, but nothing that is very sustainable at this point in time. I think Tesla is doing
All right, bear flag until it's not.
rockets as well as seeing if they're able to fall off in a substantial way. I think that's really providing a couple of headwinds for the stock right now. I think there's now a really direct trade. We don't see a lot of public correlation with Tesla because of what happened with SpaceX. That I haven't seen that correlation.
Yeah, Kevin, I completely agree. I feel like unfortunately X does somewhat affect Tesla shares, a little less than it used to, but SpaceX is somewhat on a island of its own, which is perhaps a good thing given the fact we don't need more headlines to cover when it comes to all things Elon Musk. But we will leave it there. Really great job as always. Kevin Creasy, market correspondent for the network. Now coming up next, we'll discuss when Las Vegas Sands is going to take major discounts for Davis stocks to have in 2024 when we discuss the forecast for the rest of the year.
All right, watch for the reversal here. Looks like we might start to move a bit more of shorts cover, and we got new money come in. Nope. Looks like a bear flag. Watching Apple here. Looks like a bear flag on a SPY at the moment. Got 17 minutes to go. I'm going to grab my lunch. I'm going to sit here with you guys. I'll be right back. All right, got a nice reversal underway at the moment. You could buy some calls here if we get up to the high before the Fed, maybe take some puts. Some of you like to trade the candle, set up that Yoda, put in the trading room. You could try that as well. Or you can just wait for a clear direction. Okay, just eating lunch. I'm here.
Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
At 2 p.m. Eastern Time, we get the US interest rate decision, forecast no change on the prior 5.5%, the FOMC summary of economic projections, and the FOMC rate statement. Looking at more analyst views, ING say the Federal Reserve is widely expected to leave the Fed funds target range at 5.25 to 5.5% at the upcoming FOMC meeting. Softer activity numbers, cooling labor data, and benign month-on-month inflation prints signal that monetary policy is probably restrictive enough to bring inflation sustainably down to 2% in the coming months. A narrative that is being more vocally supported by key Federal Reserve officials. Today, markets are clearly of the view that interest rates have peaked with 125 basis points of rate cuts priced through next year. Underscoring this shift in sentiment, we have seen the US 10-year Treasury yield fall from just shy of 5% in late October to a low of 4.1% on December 6th. In that regard, the steep fall in Treasury yields in recent weeks is an easing of financial conditions.
November, remember we called it and followed through into the month of December. If anything more than that, that's I'm more to auto commercials.
For example, mortgage rates have been swift to respond, with the 30-year fixed-rate mortgage dropping from a high of 7.9% in late October to 7.17% as of last week. We think the Fed will eventually shift to a more dovish stance, but this may not come until late in the first quarter of 2024. The US economy continues to perform well for now, and the jobs market remains tight, but there is growing evidence that the Federal Reserve's interest rate increases and the associated tightening of credit conditions are starting to have the desired effect. And from BlackRock, they say we see the central banks pushing back against market hopes for rate cuts at this week's meeting. We expect structurally higher interest rates in the new regime.
Things to watch for here today, guys. You got the statement first and foremost. Are they going to remove that tightening bias? Because
do you want to stay up to date with the latest and needle-bleeding entities for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
We're also looking at the dot plot because right now the Fed's calling for one more hike and 2 cuts in 2024, but the market's pricing in well beyond that in terms of cuts, 4 cuts in terms 2025 adopts, ultimately, there's been some confusion there as well. You've got the stable of economic projections, so will they revise their expectations in terms of inflation, unemployment, GDP? I wanted to step away from this chart here and take a look at this one because this really speaks to some of the strength we've seen on the bigger picture here, right? You've got most recent move here, what we just looked at off the October lows, 4,100 again up to 47, and just pointing to the fact that we're above 50, above 200, taking up our October highs, the significant taking up September highs, so the pause for around this 46 level, but more recently up to the July levels, guys. This is this year. We're watching rates, and I think it all comes down to that really. We're watching this dollar and some things as well, but we're really going to be keying off what's going on from the Fed today. And, you know, for the most part, the market throughout this rally this weekend has actually shut up and we've spoken about this and started saying for a while. And well, one of the positives has been rates have come up. Listen, take a look at this chart. This really speaks to, I think, well, for one, what we need to see in order to get continuation of that rally is look at up to 3,800 in the S&Ps. Into the highest possible. Rates continue lower. That could hit ultimately. You can see the move from 5% down to 10-year yields. Looking at our little chart. So this basically coincides with that rally we just looked at in stocks off the October lows, both down by 5%, 10-year maybe down 4%.
At 2 p.m. Eastern Time, we get the US interest rate decision. Forecast no change on the prior 5.5%. The FOMC summary of economic projections and the FOMC rate statement.
All right. Time to get real. See if we can get a follow through. All right, FOMC in 4 minutes, rate decision, and then Powell at 2:30. All right, we continue to rally. Apple fading a bit more. VIX dropping off. VIX dropping off. That's because you're making money, Steven. All right, SPY continues higher. Nice rally. We got 2 minutes to go, less than 2 minutes to go for the Fed FOMC rate decision.
One minute remaining.
Okay, let's get ready. Get ready for the move. Got a trader buying the 442 puts at that gap, 442. SPY 442 puts. Puts. No change. No change. No change.
High tip alert plus 800.
So
Extreme
FOMC
high
median
tip alert.
forecast shows rates at 3.6% in 2025 and 2.9% in 2026. Median 2024 unemployment projection.
Big move. Big move on SPY.
FOMC median 2024 growth projection at 1.4% versus the prior 1.5%. FOMC rate forecasts show a wide range of projections for 2024. Economic growth has slowed from strong pace in the third quarter. So the Fed will continue bond holding reductions as previously planned, and the Fed will continue the same pace of reducing treasuries.
There it goes. There it goes.
That weigh on the economy. The FOMC vote was unanimous. The Fed repeats U.S. banking system is sound and resilient, and inflation eased.
All right, everything's up and away.
Median forecast shows 75 basis points of rate cuts in 2020.
Broadcom turning, all the FANG stocks turning. Big move on. Big move here.
The FOMC median 2024 core PCE forecast declined to 2.4%. Fed officials' median view of Fed funds rate at the end of 2026, 2.9%. Fed officials' median.
Okay, here we go.
Fed funds rate at the end of 2025.
Here we go. Nice move.
View of Fed funds rate at the end of 2024, 4.6%.
Okay, I'd be taking some profits off into strength. This will probably reverse.
3.6%. Median view of Fed funds rate in the longer run.
Holy smokes. That's a nice move. Nice move. Apple on the move. VIX dropping hard. Congrats.
Fed officials see inflation at 2.4% in 2024, returning to the 2% target in 2026.
All right, nice move.
Extreme high tip alert.
There we go. Nice move. Nice pop.
Inflation has eased but remains elevated, and FOMC strongly committed to returning inflation
I didn't hear anything he said so far. I'm not listening to anything he said on the news. I'm just watching price action, taking some profits off into strength.
Tighter financial and credit conditions are likely to weigh on economic activity and hiring and inflation, but the extent of effects remain uncertain.
Maybe some puts up here, not a bad idea.
The S&P 500 gains ground after the FOMC statement last night with Series spot 3%. US Treasury 2-year yields fall further after the Fed statement last round.
Extreme high tip alert.
5 basis points at 4.558.
Nice move. Nice move. Still going. Still going.
Fed swaps price 130 basis points of cuts for 2024 versus 115 basis points pre-Fed decision.
Look at this market. Very nice. Very nice.
Euro rises to 1.084, the highest since December 5th. Yen gains 144.2, strongest since December 8th.
Extreme high tip alert.
More upside. Okay. SPY taking some off into strength. All right. Oh, look at that. Look at that. Holy smokes. There we go. Boom. That's a nice move. All right. Beautiful. Let me see. Some of these positions I want to take some profits into. Nice move here.
US interest rate futures raised odds of a May rate cut to 90% after the Fed decision versus 80% just before.
High tip alert plus 800. Extreme high tip alert.
All right, nice move here. Everything's working. Very nice. Very nice. Make sure you're taking some profits off into strength. Okay, looks good. Tesla, nice pop there. Walmart. Let's see, Walmart. Let's see what you look like, Walmart. Yep, nice move on Walmart.
Extreme high tip alert.
Biotechs, big rip on the biotechs. Netflix, IPB. All right, big move. Apple, nice. Looking good. Apple. Nice move on Apple. ALK. Nice move on ALK. The Alaska Air position.
High tip alert plus 800.
All right, selling some into strength. ALK, I'm going to sell some into strength here.
Extreme high tip alert.
Sell some into strength, folks. We're more than likely going to pull back a little bit, I would think, on these. Okta, that was one mentioned by Easy yesterday, was it? Or no, it was Aaron, right? Aaron, you took Okta. Okay, let's see. Okta. The calls. What are the calls doing? Calls look good. Calls on Okta.
Extreme high took alert.
Okta. These security stocks have been doing very well. Security. Okta. Not Octus. Okta. All right, clearing the 200-day Okta.
High took alert plus 800.
US rate futures lift March 2024 rate cut chances to more than 60% following the Fed statement, according to FedWatch data.
All right, a lot of positions on the move. Take the opportunity to exit some if you have too much exposure on. Alaska Air looking good. Alaska Air. Let me take another look at this. I want to sell some into strength. ALK. This is lasting a lot longer, this move. ALK looks really good. Here's ALK, the airlines looking good. Following through. Yikes. These stocks are all blasting higher. Take the opportunity to reduce your exposure into OPEX. Remember, we got OPEX on Friday, triple witching. So 4,700 is a major resistance level overhead. 4,700 major resistance. We're just about to get to 4676 first resistance.
We have posted the FOMC press conference live video on the feed for all those interested.
Okay, Alaska Air. Walmart looking good. Netflix looking good. Everything's working. Tesla. If you needed a pop like this to exit some of your positions, I would take the opportunity to reassess the markets in the next few days into OPEX. Always a good idea. Reduce your exposure. If you're up big 50, 60, 70% on options or more, take some off. Don't be greedy. Take them off when you can, not when you have to. Okay, Zillow Group, that was one that Josh Brown mentioned yesterday. That's doing well. What's Broadcom doing? Broadcom, big week for Broadcom, just killing it. Broadcom, thank you so much. Okay, that looks good. Let's see if Broadcom can go. Broadcom. S&P. S&P sticking here. Tesla. $231. Where's Tesla now? Tesla is a couple of points higher, $2 higher.
US Treasury 10-year yields fall to the lowest since August, last down 12.5 basis points at 4.08%.
All right, Netflix taking off the upside. Thank you. All right. Broadcom about to break out the new highs. There goes S&P. Looking good. All right, so people are very focused.
US Treasury
8,000 calls bought on the January strikes at Freeport McMoran. 8,000 calls bought on Freeport. SCX. Oh my gosh, they're going to go more. January 38 calls. January 38 calls on Freeport McMoran. FCX. The January 38 call. Okay. Yeah, I see them. Okay, cool. Vertical on that one. 38. And sell the 42. January.
The S&P 500 is still extending gains after the FOMC signals the end of rate hikes and lower rates in 2024. The index is last up at 0.65%.
Extreme high tilt alert.
There goes Freeport. Freeport's a buy. Freeport is a buy. Freeport. Freeport's a buy.
At 2:30 p.m. Eastern Time.
Man, the markets have gone nuts here.
We have posted the live video on the feed for all those interested.
Kind of slow coming into FOMC, but now it's just gone. Big day, big day, big, 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 big. Did I say big? Big day. All right, so looking really good.
High tilt alert. plus
Oh
800.
man, the Bears are getting run the F over. Gold. Nice one, Russell. Nice one. GLD. Nice. GLD, nice. Gold, nice. I like it. I like it. I love it. Looks really good. Reversal. GLD gold. Reversal on gold. You see Russell posting in the trading room. Yeah, that's pretty good there. Everybody in the room seems to be having a good day.
High tilt alert.
Cayman, you're so weird, man. Oh, man. Lordy, lordy. Lordy, lordy, lordy. Don't get too giddy, folks. Take some profits off into strength. This is something else here. 2:30 is coming up. We got 8 minutes to go. 8 minutes for Jay Powell to ruin it. 8 minutes.
High tilt alert. plus 800.
Yeah, yeah, good. Yeah, the Russell's been lagging. Oh, well, Jesus. Look at the markets go ballistic here. Holy smokes.
Extreme high tilt alert.
All the credit spreads I'll leave alone because the markets are just blasting away. Vertical calls, I'd be taking some profits off into strength. There goes Zillow. That was a nice trade. Thanks to Josh Brown for that one. I think he said he didn't take the position. but he was looking at it. So I don't know if he took it yet. All right, Tesla, nice reversal on Tesla. Very nice. I'm sorry. I'm just taking my time going through stocks that are up 20, 30, 40, 50%. I want to take some profits off. I want to keep the credits on because the markets are geared up for going higher into OPEX. So we have time, but any calls, any vertical calls, I'm thinking about taking profits off. I'm looking at those. Okay. So IWM,
Dollar extends drop against the Japanese yen,
IBB.
43.76, now down 1.17% on the day. At 2:30 p.m. Eastern Time, we get the FOMC press conference. We have posted the live vid.
Protect your trade from macro headline risk with Financial Juice Pro. Now only $99 a year for our brokerage service.
Okay. Don't forget to take some profits off. We're starting to see profit taking coming in. Broadcom. Okay, Netflix is just doing really, really well, spectacularly well. Tesla looks good. Apple looks good. Take some profits on Tesla as it approaches 198.200. Netflix is still going. Netflix is up 3.5% on the day, $16, and still going. Netflix is still ramping higher. Okay, Netflix looks good. Beauty. Netflix gearing up another leg higher now. ABCD and starting to show signs of a DDDD higher. Okay. Beautiful. Very nice. GameStop moving higher. GameStop. GME. GameStop on the move. GameStop is running. All right, so meme stock. All right, looking good. Freeport. Nice move on Freeport. Wow, this is such a crazy day.
High tick alert plus 800.
Walgreens Boots Alliance continues to move higher.
Fed swaps price policy rate under 4% by December 2024.
Walgreens breaking out of a
Expecting the beginning of the
4-day consolidation. Walgreens Boots Alliance breaking higher too. WABA 4-day consolidation breaking out above 24, could go 25, and then maybe the 200-day at 27.
Extreme high tick alert.
Okay, this is all looking really splendid. Alaska Air looking good. Okay, so the bulk of the move is under us now. Okay. Okta. And we're still going. The Fed, the markets like what the Fed had to say. Jerome Powell, time for him to spoil it. All right, so we're looking for a day like this.
Extreme high tick alert.
Finally getting a nice follow-through day. And the markets voted
has begun the press
thumbs up.
as we are squarely focused on the dual mandate.
All right, so Jay Powell's going to start speaking. He's going to ruin it all,
Fed's house as inflation has eased without significant
potentially.
unemployment. But says inflation is still too high and the path forward is uncertain.
Watch it. What he has to say now could bring the markets back, so I would be taking profits off. Take some profits. Yeah, that's cool. That's cool. SoFi. Here's SoFi and SoFi. Broadcom. Consolidating. Banks, Wells Fargo at the highs. Looking good. Thank you, Wells.
As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase.
Powell sounds a lot more upbeat.
But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all.
Okay, don't ruin it, Jay. Don't ruin it.
Early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come Along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter.
High tick alert plus 800.
High tick alert.
GDP is on track to expand around
Extreme high tick alert.
Extreme high tick alert. Let's go. LATSGL, let's do it.
After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year.
Oh, there goes the market.
The market remains tight, but supply and demand conditions continue to come into better balance. Over the past 2 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years.
Oh, look at this market.
Immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains
Holy smokes, look at this market.
based on the Consumer Price Index and other data. We estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys.
Nice.
Businesses and forecasters, as well as measures from financial markets. As evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP
Extreme
is
high tick alert.
2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion.
Oh man, this market is just baking it. Baking it. Wow.
Extreme high tick alert. High tick alert plus 800.
Maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median
There goes AVGO.
at the appropriate level of
AVGO on the move, Frano.
4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026. Still above the median. These projections are not a committee decision.
Wow.
Plan. If the economy does not evolve as projected,
Very impressive.
policy will adjust as appropriate to foster our maximum employment.
I don't know. I sense that he sees that
Extreme high tip alert.
the markets are doing what he has been looking for. This is probably the first time he sounds to me. It's just my interpretation of what he's saying, how he's saying it, his voice inflection, just the overall way that he sounds. He doesn't sound downbeat. He sounds upbeat. Sounds like things are working. He's not saying anything about the markets getting extended, the irrational exuberance or anything like that.
We remain committed to bringing inflation back down to our 2% goal and keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude,
Look at this market. Oh my gosh, folks. I can't tell you what to do, but I'm definitely taking some profits off into strength. You don't get too many opportunities like this.
thank you. I look forward to your questions. Chris Rugaber, Associated Press. I wanted to ask, how should
Very nice.
addition of the word any before additional funding in a statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you. So, specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming in that sense. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table, so that's really what we were thinking.
All of your teamwork in the room, teamwork, very much appreciated. Great job. Great job. Holy moly.
in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, like we said, the first policy rate, and that's really the question that we're still we're very focused on that, as I mentioned.
Whoa. This is one of the best days in like several weeks.
It's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally begins to
For me, anyway, this is the best day.
Extreme high tip alert.
Best day since the October reversal. Everything is working. Literally everything is working. Jeez. This doesn't happen. Doesn't happen very often. And now you can hear it in my voice. I'm sounding a little giddy. That's a warning sign. That is a warning sign. Well, I think we could keep going into OPEX because the markets obviously like what they're hearing from Fed Jay Powell. Usually I don't like to hear him talk too much, but you know, I'm okay with it this time because he's in our favor. Sarcasm aside. I'm just peeling stuff off here and there. I'm only peeling things off that are call verticals that, you know, if they start to come back in, I'll start to lose some profits. Credit spreads, I'm holding on to those because markets are moving away. Put credit spreads. They're pulling away. Let me see what IWN is doing because I have a condor on that.
And we heard it, and I bring back George Sillis because I was listening to the policy statement, listened to the first question, and then that question about any payment. His response, where he said the determination of any additional firming, basically, they believe it's likely we are at or near the peak rate.
High took alert plus 800.
Okay, the call side of this vertical, I'm going to take off. I mean, Iron Condor of this IWM. There's a call side. I'm going to close that. The put side. IWM.
Extreme high took alert.
Yeah, I mean, just from a market perspective, you're seeing the most interest rate sensitive areas of the market move higher, particularly the Russell, which again is a chock full of regional banks, which again, from the standpoint of interest rates, their balance sheets are going to be improving with lower rates going forward. I think that's pushing a lot of that to the upside. I think at the end of the day, too, what I found interesting about his commentary was their projections going out to 2026. I know it's a far way from here, but 2.9% is effectively where they see the federal funds rate in 2026. Now,
Nice.
the target 2% at that time or before that, they're still looking at a sort of a federal funds rate that's above inflation, which again is above their long-term trend, and I think that's quite positive.
Broadcom looks like it's going to break out.
The market, some idea that they have a little bit more maneuverability if things go bad from a contingency standpoint going forward. But I think, looking at it, they still are very committed to inflation, restraining.
Good to sell into strength.
You made a mention of essentially that they've increased rates to well into restrictive territory. So they're inferring that their job is done quite well when it comes down to subduing inflation expectations.
Don't buy Broadcom up here. Don't misunderstand. Sell into strength. Take profits into strength if it does break out.
Extreme high took alert.
They're not declaring victory, but they're also not saying that.
Okay, Palantir. What are you doing? Palantir's turning the corner. Okay, that looks good. Palantir.
So leaving the option open, but from the market's perspective, just looking at the latest.
Shake Shack. All right, Shake Shack's doing well.
The market is expecting a cut coming forward this year in 2024, but we're already at the peak in terms of our cycle rate.
And how about this? We just saw the Dow Jones Industrial Average break out to new all-time highs, not 2023 highs, 36,957. We need new hats. I remember my Dow 10,000 hat. When you look at some of this and you think about the labor picture, you were just touching on that. So much of this drives our economy. I mean, he did say about slower.
Okay, butterfly.
Numbers going forward.
Extreme high took alert.
Concerns about consumers. Their credit card debt is at all-time high.
Yeah, I mean, at the margin, Nicole, you have to consider there are going to be some consumers who are not faring very well, but other consumers are. And I think, with their stance on policy going forward, financial conditions are expected to ease. And I think that's going to help shore up some of those at margin or at-risk consumers who are struggling. He did talk about the mortgage market, which again has slowed substantially in the past year.
But overall, I think the economic conditions are still very well anchored positively going forward. But they are still, again, aware that inflation is their target goal mandate to get it down to 2% as quickly as possible. But again, doing so without the risk of throwing the economy into a recession. So they're projecting really a Goldilocks situation: lower
Extreme
rates,
high
stable
tempered.
growth, unemployment that is still at or slightly above 4%. And again, all those variables.
All right, so Shake Shack approaching max gain. I'm going to sell this into strength.
Again, at the margin, there are going to be some consumers that are falling through the cracks because of higher rates.
Shack.
Right, and look, he still noted that they are going to proceed carefully, given how far they came, but the outlook is still uncertain. There is a little bit of a lag effect, so they're still waiting on that. But that nothing is for sure, and that their decision still will be data dependent.
High tick alert plus
He's
800.
alluding to the fact that it's done for now. George, I guess our conversation is done for now, but I will see you again tomorrow, of course. Thank you, George Phillips, always for his insight on the breaking news. In the meantime, let's check where these markets stand. The S&P 500, 4694. It is up 50 points of 1.1.
Extreme high tick alert.
Into this, it was up.
Looking really, really special here.
The Dow breaks down to a brand new all-time high. It's up 1%, up 360 points. Going into this 2 o'clock hour, it was up just 28 points. And the Russell does the most. These are the interest rate sensitive small cap stocks. And as rates will come down, the Russell will slide. And it had been in negative territory to shoot up now 2.5%. I'd like to welcome in Alex Coffey, the host of Next Gen Investing, Tom White, co-host of Fast Market. So glad you are both here. Tom White, your thoughts? As I just did a recap, we saw some highs, the Russell turning, and all this Fed speak that we got.
Yeah, it's what the markets wanted at this point. If you're looking at the moves that we've seen, because we were already overbought in
Extreme high tick alert.
Before the announcement came out, and now Fed Chair Powell talking, they're trying about 75 basis points lower on that terminal rate from 5.1 to below.
All right, we're starting to hesitate here. Markets are starting to hesitate.
If you don't think the lagging effects are fully priced into the market, why are you cutting your estimates, or when you think you're going to get an additional rate cut besides the 50 basis points they had expected and their last meeting in September? If we hadn't felt the lag effects, you're giving a dovish statement here to a market that's already starting to steam up a little bit into the end of the year. So that'd be my only.
Market's starting to steam up. Is that what he said? Oh man, what a nice present.
And you mentioned those one comments that on rate cuts, they're now going to become a topic of discussion moving forward, and they added the word any to show that we thought that they're likely at or near the peak high. So basically taking any more rate hikes off the table. The market likes that, and you're seeing 10-year yield fall to the lowest level that we saw since the beginning of August. You're seeing the dollar just crater, so that's supportive to the equity markets at this point.
Yeah, and that's exactly when we saw the market take that next move. Because, we have on the Thinkorswim, we have the minute by minute, and we are able to see that quick reaction. What did you think, Alex Coffey? What were your takeaways?
Yeah, I think we got to look at the actions through their dots, their actions through the fact that
High tick alert plus 800.
Said that they're done. I know they leave the door open, but I mean, effectively.
There we go.
Peak policy. You got new all-time highs in the Dow Jones Industrial Average. What this really comes down to the next question is, where are we going with GDP? Where are we going with the economy? All this is interpreted as positive as long as we do skirt the recession. As long as we do land the economy or have no landing of the economy. The next question now, Nicole, is going to be, is that what happens? Because if we do have some
meme stocks are going.
The early parts of next year, this may be a very interesting moment in time in terms of how stocks are reacting right now.
Yeah,
Yeah, and thank you for that, Alex. And as we talked about going from 50 to 75, Tom, adding an extra cut in, you even had some outliers who thought you might even see more than that. At the same time, talking about real rates likely to come down. So you have to wonder, I mean, they're going to be aggressive on the other side because, you have the real rate, minus this inflation rate, and then you get
Extreme high tick alert.
is that in itself will be coming down regardless of inflation coming down.
Yeah, regardless, Nicole.
That's why the Fed put in that extra Fed rate cut for next year is the fact that we've already seen the 10-year move down in the
Look at S&P. Oh my goodness, this thing is just not going to stop. Oh, Lordy Lord.
That's part of it. I think if you look at the risk on trade that we're seeing here today, if there are
Oh, I'm at max profit. Max profit for this vertical on IBB. Okay.
I don't see that happening unless maybe unemployment gets up to 4.5% or higher at this point, but their projections for this year are lower. Next year, 4.1%, and then it kind of flattens out for the next 2 or 3 years, according to their economic projections. So I would expect
Extreme high tick alert.
this semblance of risk on to maybe start to get capped here a little bit, because I think if the Fed keeps talking dovish this way when the economy's still doing well and unemployment rates at 3.7%, Nicole, I'm having a hard time figuring out why they were a little bit more dovish than the market expected.
Man, look at this. Look at IBB. IBB is at max profit. If
I couldn't agree more. I think that is the question that will be lingering until the next Fed meeting. I mean, was it necessary for them to make some dovish comments into next year to allude into more rate cuts? I mean, and
High
they will
tick alert
continue
plus 800.
over $1 trillion. They've been spinning off the balance sheet, right? We're seeing that, and they will continue all this.
all right. Wow. I'm just like floored.
Extreme high tick alert.
Just have so much time to take profits off into strength.
I think what Tom's alluding to, the question he asked is the right one. I mean, he's essentially saying, why are you so dovish if things are
This is beautiful.
plan, you're still worried about inflation and the economy's too hot. The actions say that they're worried about the economic trajectory and they're no longer worried about inflation. That's what I'm focused on. I think it sets up for a really interesting start to next year.
Yeah, and look, oil's been down 7 weeks in a row, and that too is giving a little relief to folks. But we'll continue that conversation. It's wonderful to see you both, and thank you for being with me as the Dow hits brand new highs. Gentlemen, we're up 400 points, and when I say all-time highs, Alex Coffey, Tom White, thank you. We'll head straight back to Washington. Chair Jerome Powell continues to speak.
Extreme high tick alert.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? In particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, there's just a lot of things. It's you see job growth still strong, but moving back down to more.
Jeez, look at this market. I mean, I can't remember the last time I've had so much time to take profits off into strength. So many different positions.
If you look at surveys of businesses, that they're sort of the era of this frantic labor shortage are behind us, and they're seeing that the shortage of labor is being significantly alleviated. We look at shortages of workers, whereas they thought job availability was the highest they'd ever been or close to it. That's down to more normal levels by so many measures: participation, unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other the unemployment rate is very, very low. And these are, but overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Oh boy, really nice. I don't want to close these credit spreads because that's going to keep us working tomorrow into OPEX. Tesla, big reversal on Tesla. Wow, what an opportunity that was on Tesla. Good JP Morgan.
A common theme is that while inflation is coming down, that's very
Oh Lord,
the price level is not coming down.
won't you buy me a Mercedes Benz? My friends all have Porsches. His name is Russell.
Improve the mood of people. But we see those public opinion surveys. The thing that we can do is
Broadcom, no breakout yet. Broadcom,
use our tools for
Paramount.
price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve
Coca-Cola.
an extended period of high employment, which is so beneficial for
Shaq's still going.
and
GameStop.
Hi, Victoria Guido with Politico. I wanted to ask,
Politico.
on the flip side, if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise, at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job demand-wise?
Sorry,
If the economy looks like it's starting to
Hi,
fall into
Tickler
recession,
plus
if
800.
the jobless rate starts to rise.
that's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is
GameStop on the move.
Extreme high tickler.
coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment.
Freeport, nice move on Freeport. Yeah, really nice day. Nice job there, Armando. Nice job on Mara. Okay, we're more than halfway. Looks like we're almost more than halfway into Monday's candle now. That sell off. Wow, it's impressive. Oh my goodness. Oh my Lord. Look at this market. Now, see I know this is obvious, but it's FOMC, but the difference between VWAP tilted up and to the right or down and to the right, in this case, up and to the right, the difference between up and to the right, a sloping VWAP compared to a flat VWAP like yesterday. See this flat VWAP over here yesterday? Oh, that was this morning. Sorry. Whenever you get a flat VWAP, what a difference that makes. You know, you can tell the stock is in play when that's the case. Man, I don't know. It's just everything is going here. Everything is going. Pilgrim's Pride. Pilgrim's Pride's about to break out. Finally.
Edward Lawrence of Fox Business. So, if the Fed rates, as the dot plot is showing, about 75 basis points. Does that signal or that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't
Extreme
a plan.
high
That's
took alert.
just accumulating what people wrote down. So that's not something, you know this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are and we tabulate them both. So it's, it's important for people to know that, but it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and doesn't need the tight policy. It depends on the economy can evolve in many different ways, right? So, but
Just letting things go now. Markets have gone, made their decision. Markets have made their decision.
well, that's what we're finding out, and we've seen real progress.
What I'm really happy to see is Walmart. Of all stocks, Walmart and Tesla, those reversals, really kicking in now.
Where you would expect to see less progress, we are seeing some progress there. In fact, all three of the categories of core are now contributing.
Oh man, look at this market. Yikes. About to get 4,700. Okay, we're approaching. Oh, we're through 4,700. Holy smokes.
We had some pretty positive data this morning and yesterday. I'm assuming
4,700 major gamma level. The call wall shifted up. Wow. I'm truly impressed. Truly impressed with today's price action.
Translation in PCE. So it's very, very late in the game, but nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that.
Oh man, look at this market.
So until about mid-morning, a little maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Oh, we're just going to keep going? Holy smokes, look at this.
Or whenever they come. How do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant
Is that
going to change how you...
Dollar is down to 102.80. Wow. Tesla. Well, if we weren't overbought before, we'd certainly overbought now. Would like to see Microsoft is just kind of dragging its feet. I'd like to see Microsoft take off. Broadcom dragging its feet. Amazon's starting to move higher. Let me see. I don't want to take any positions now. It's late in the day. But we'll reassess things tomorrow. We will reassess things tomorrow, definitely.
We're going to be making policy in this difficult, uncertain, really unprecedented environment. Someone once said that you know the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So one of the reasons why we slowed down this year, we started slowing down at this meeting last year.
Tesla, big reversal on Tesla.
Restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that, but the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
Thank you, Chair Pell. Jennifer Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned, PCE inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are of course stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
He's just not going to talk about cutting
The
rates.
reason you wouldn't wait to get to 2% to cut rates is that policy would be, it would be too late. I mean, you'd want to be reducing.
I love these questions from these people. They're just trying every way they can to get him to say when he's going to cut rates. He's just not going to do it. Not going to do it.
You know,
Come on, Broadcom, break out already.
it takes a while for policy to get into
GameStop,
the economy, affect
Freeport.
economic activity, and affect inflation. So I can't give you a precise answer, but if
Of
you
course
look at
not.
what's in the SEP, and you know, I think you'll see a reasonable estimate of the time lags and things like that that it would take.
Reasonable?
I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Okay, we're starting to show some profit taking coming in.
Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year. I'm curious, do you think something has changed in our understanding of inflation?
Walgreens,
Or do you subscribe to this notion still?
still going. Walgreens.
I think I think this, you know, we felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions of supply and demand. And the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the
BITO turning the corner. Bitcoin pushing back into Monday's price action. That's selling that we saw on Monday. We're about halfway through on Bitcoin.
It may or may not be about different.
Wells Fargo, big breakout on Wells Fargo.
Inflation was not the classic.
Palantir, looking for that to follow through next couple of days. Double bottom on the 60-minute. Palantir.
Very strong demand without question, and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And you know, we had the view, my colleagues and I broadly had the view that we could get a lot of, you know, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand lowered, reduced, and you know, something like that is happening. You know, once that part of it runs out, and we think it has a ways to run, we definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it gets down to demand and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different.
Coca-Cola. Look at this freaking move on Coca-Cola.
To suggest that we have any certainty around that, we just don't know. I mean, inflation keeps coming down. The labor market keeps getting back into balance, and you know, it's so far so good. Although we kind of assume that it will get harder from here, but so far it hasn't.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
Okay, more profit taking, folks.
Talking about altering the pace of QT right now, just to get that.
Beyond Meat.
So balance sheet seems to be working pretty much as expected. What we've been seeing is, you know, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up The reverse repo facility has been coming down quickly, and reserves have been either moving up or as a result or holding steady. At a certain point, there won't be any more to come out of, but there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected with it.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking another question. I guess you're implying
Adobe's down, Moderna's down, Zoom is down, and T-Mobile's down on an up day. Real estate winning, financials, utilities, consumer staples.
And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time. Thanks very much.
Thank you, Chair.
And with that, welcome to Closing Bell. I'm Scott Wapner here at the New York Stock Exchange. Fed Chair Powell, as you see, wrapping up his final meeting, news conference of the year, and third straight pause of what can really only be called dovish language in both the statement and the Fed Chair himself. As a result of that, stocks are rallying. I want you to take a look here. The Dow, a new record high, was trading above 37,000 for the first time ever. Stocks are higher and sharply so across the board. Yields, they're going in the opposite direction. They are falling, and they are falling sharply. Look at the 10-year note yield, 4.04. Just an extraordinary a bit of events there in Washington. The Fed Chair saying they're proceeding carefully. They're seeing what they wanted to see in terms of inflation coming down. He mentioned their own estimates of PCE continuing to move closer towards target. Stocks up a little more on that. He said the Fed is, quote, likely at or near the peak rate for this cycle. Stocks up a little more on that. Bob Pisani calling what happened today about as Goldilocks as it gets.
Yeah, I would agree.
Who's going to join us momentarily, suggesting, quote, the Fed took a step towards the market rather than the other way around. Joining me now is Double Line Capital's Jeffrey Gundlach, who's with us exclusively, as he always is once the Fed Chair finishes. Jeffrey, welcome back for our final visit of the year. I'm glad you're with us today.
Yeah, we made it all the way to December, Judge. Interesting times.
Yeah, that's for certain. I mentioned what Pisani and Leisman have called it. What would you call today?
Well, it's pretty dovish. I mean, the word of the day is any. Last meeting, the word was careful. He said that multiple times last meeting. Market likes that because it respected the fact the curve's inverted, economy slowing down. But that any word didn't have to be inserted. And it strongly suggests that the Fed inserted that because they believe, I think, they're done. And not only are they done, what a lot of people don't realize is the Fed has been on hold for 4 of the last 5 meetings. So it's a trend. And we talked last meeting, November 1st, that we had started a bond rally that day. And what a rally it's turned into. It's turned into quite a good 6 weeks with the 10-year Treasury yield down 100 basis points. And the long bond, up in double digits. So we had a November to remember, one of my clients said in a meeting I did with him yesterday, with one of the best months ever for the investment grade bond market, up over 4.5% in the month of November alone. That hasn't happened since the 80s, which is really something because last time it happened, you were starting with yields up at 10%-ish. And here you were starting with yields at 5-ish, so half the yield. So you needed an even bigger basis point move in rates. So I thought the most interesting thing in the press conference came.
Hi, Tip Alert plus
If I
800.
heard it right, I think Jay Powell said that he wants to cut rates before we get to 2, if I heard him right. And because he's respecting the momentum that inflation can have, just like I criticized him 2 years ago for going too slowly, and inflation overshot by 500 basis points above where they thought it was going to 4% or so. It peaked out of the CPI at 9, and now it's coming down just as fast. And I've heard a lot of people before the announcement were talking about, you can take 3-month PCE, take a look at core, this and that, 1-month data and everything. There's ways to get to 2% sort of numbers, and I'll just add one that I did hear today. That's core CPI ex shelter, which is at 2%. And the reason I bring that up is shelter is a bad construct. It's owner's equivalent rent, and it lags. And it appears to our research that owner's equivalent rent is going to come down by at least 400 basis points over the course of 2024. And since that's about 30% of the CPI, there you go. So our CPI model suggests that we're only going to get one more month of a 3-handle CPI year over year, and that it's quite possible at this point that the headline CPI could be 2.4 in June. And if that's the case, I think the Fed cuts rates, because I heard Jay Powell, I think, say that, we can't wait until inflation's at 2, because he respects the momentum on the downside, because he learned a little bit of a lesson about momentum on the upside.
He said they're aware of the risks of waiting too long to cut rates. Jeffrey, he mentioned on numerous occasions today the possibility of cutting for the so-called right reasons. If the economy is just normalizing, you've got from the outlook today the so-called dot plot, 80 points of cuts next year. As I mentioned, how Leisman characterized this, the Fed moving closer to the market rather than the other way around. Would you agree with that? Do you see cuts, and several of them next year, for the right reasons?
I don't really see them for the so-called right reason. I think that's what's baked into the dot plot, and a little bit less so, but somewhat to the shape of the yield curve, that they're just going to cut by 3/4 of a percentage point or so, says the Fed. I mean, I think that's pretty unlikely. I think that if they cut rates that much, they'll have to cut them more than that. So I believe that we're going to see the yield curve de-inverting in the first part of next year. I think we're still going to have bonds rallying. We've broken down below the trend line on the 10-year Treasury yield that goes back a couple of years, and there's a lot of room below it. I would guess that we will see the 10-year Treasury yield in the low 3s sometime next year. And that would be consistent, in my view, only with the Fed cutting more like, 200 basis points or even more next year. So I think we're looking for a recession next year. We've been talking about this. The market seems to be picking up on that. And we're starting to see the good part of the pivot from the Fed, which is relaxation of financial conditions. And that leads to, for the first moment, risk assets doing well. And of course, they've done very, very well since the last Fed meeting, and I suspect it's going to not be a trend change before year end. But I believe that I noticed the action of the stock market was interesting today, because as the 10-year Treasury got all the way down to 4.0%, and it couldn't break through down to a 3-handle, I noticed the stock market started to lose momentum. And then when it backed up on the 10-year to where it is now, just a few basis points. But there's something about if you break below 4 on the 10-year that I think it almost sounds like a fire alarm going off relative to the economy. And I think we might start to see the correlation of strong bonds and strong equities start to break down. When it comes to fixed income strategy, I outlined that I didn't like T-bill and chill. That's what we talked about the last meeting. I said there's nothing wrong with a 556-month bill, except the fact that you only get it for 6 months. You wanted to be a little bit further out the curve, say 3 to 5 years in credit, and marry that with long-term treasuries. And all of that has worked. And I think that it's likely to continue to work in the new year. We have been advocating strongly for this type of a strategy, and we've gotten a lot of interest from large institutional clients. And one of them was about to pull the trigger maybe 2 weeks ago, called us today and said, gee, did we miss it? Which is really interesting, because I think that all this money that's in money market funds and it might be over allocated to other assets than bonds and institutions. I think the logic that people have that money market bloat is going to go into the stock market is wrong. I think it's unlikely for investors to go from risk-free 6-month T-bills to the Magnificent Seven at massive PEs and all-time highs on the Dow Jones Industrials. I think they're much more likely to go from their mountain of cash in T-bills into bonds. And so I think that the strategies that I've outlined in the past couple of times we met.
All right, we got more profit taking.
In the middle of the capital structure and long-term treasuries, I think you stay with it for now. I've been thinking about that movie Braveheart, where they're about to attack, and the Mel Gibson characters say, hold. You know, they want to fire or do whatever their assault is, but they have to wait for the right moment. I think you have to wait for the right moment to alter this bond strategy. And that right moment will be when the recession comes.
I mean, maybe some of the money in money markets is split. Maybe some goes into bonds for the very reasons you suggest. Maybe some goes into stocks because they see the possibility of a powerful new bull market developing. I'm going to go to, hang on just for a second, Jeffrey. Steve Leisman's just stepped out of the room, and I do want to go to him because, Steve, this was extraordinary on a number of levels, I think. Number one, the Fed chair in his news conference did nothing to walk anything back from the statement. He did nothing to hawk it up, so to speak. And I know he sounded like it would be premature, and he said as much, premature to declare victory. There was no jumpsuit, there was no aircraft carrier, but he doesn't seem like he's that far away either from doing just that.
Yeah, I think this was a pretty big day, Scott. I think that the Fed pivoted today. I think it went from having this bias to hike to being in neutral with a forecast to cut rates. I think that's a pretty big deal. And he acknowledged in response to my question that, yeah, they sat around the table today and yesterday, and they talked about rate cuts. Here's a quote from the press conference.
The other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place that begins to come into view and is clearly a topic of discussion there in the world and also a discussion for us at our meeting today.
Scott, I thought the chair might have tried to hold back the water on the dam one more
Low
time.
tick alert minus 800.
Data yesterday and today, especially the PPI and what it says. He mentioned this specifically. We talked about it on your show with you today. What the data today says what's going to happen to the PCE numbers next week. It's kind of untenable for him to hold back and to maintain a position that was too hawkish. And just real quick, we have been talking about this number that Jeff was talking about, this CPI ex shelter, which has been below 2% for several months now. There's that number right there. You can see it. It's down below 2. And then, okay, so it's not fair to take shelter out. The reason you take shelter out is because the shelter in component they use there is lagged about 3/4, Scott, from some of the other market-based indicators that are out there. And if you fold those in, you really don't have a problem. It may be that the Fed is already there. And the concern was that the Fed would keep rates high and depress the economy for too long based on bad data.
Steve, I appreciate it. Quite a day that I know we're going to be talking about many more times in the days ahead. That's our senior economics reporter, Steve Leisman, just out of the news conference with the chair. Back to Jeffrey Gundlach, who's with us exclusively, of course, from Double Line. So, Jeffrey, how come you're not willing to go as far as to say, you know what, I no longer think that we're going to have a recession. I'm wrong at this point. The economy is better than I ever thought it would be at this point. Inflation's come down much quicker than I ever thought it would be at this point. And you know what? Maybe the Fed's going to pull this off after all.
Well, I don't think inflation's come down faster than I expected to. It's really followed the trajectory pretty closely, and it's going to continue to fall further. I just think that a lot of the way the market works through cycles, I thought is so often the case. Brian Kelly, I think his name is, was on that segment before.
David, I know you're talking about David Kelly, and he was talking about a pivot that he saw, that this was a pivot today.
Yeah, not just that, though. He points out that when you first start raising rates from low levels, it doesn't have a real market damage. But then, similarly, when you start cutting rates from high levels, you start to affect the economy in a negative way, somewhat counterintuitively, because people might wait for lower interest rates if they think they're coming to do things that can accelerate the deterioration of the economy. And also, the Fed themselves is projecting a 4.1 unemployment rate, which would be up about 70 basis points from the low. And whenever historically the unemployment rate has gone up by over 50 basis points, it tends to accelerate from there to a higher level. It goes into another gear, and it's very consistent historically. I think there's a contradiction between the dot plot of unemployment rate going to 4.1 and history. So I think that the Fed's going to be wrong on the low end for the unemployment rate for 2024. And I think that once you get the market de-inverting the yield curve and you start to really get the bond rally cemented into the DNA of investor psychology, I think that's usually the peak in risk assets. That's why I say it's okay now for the Braveheart idea of hold, but you're going to have to pivot. And I think you have to pivot in a very intense way in both stocks and bonds when we get into the next recession. Maybe I'm wrong and it doesn't happen next year, but I think the odds have gone up, not down. We saw GDP now was about 5% or so in the third quarter. It's now running, substantially less than that, and talking about maybe 1% next year. And I just don't think that's the way the economy works. Just like inflation overshoots on the upside, it overshoots on the downside. I think that the economy is going to undershoot on the downside when unemployment rate's going to go up, and that is going to create a totally different response. We're going to have to have a lot of money printing, I think, to battle the coming recession, and that's why you might have to pivot across the board, because the inflationary consequences of that could be very substantial. So this is a long view type of thing, but for now, I think the Fed's pivot needs to be digested by the markets, and obviously a lot of that digestion.
Hi, Tip Alert plus 800.
And we'll see how the rest of the week plays out, because that pretty much takes us till the end of the year.
I want to sort of get your overall assessment of this Fed, because I remember so many of the conversations that we've had through this calendar year. Ones where you've suggested that, Powell was Mr. Magoo, going to drive into a wall. Other times suggesting he was up on this ladder and it's time to paint or get off the ladder.
That was at the beginning. Yeah.
And here he is with this. What I felt today was a bit of a confident air about him. In the way
Yeah, I caught that too.
battle that they've waged over
It's a pretty good way of putting it. Sort of a confident air about him.
How would you assess that?
Jay Powell.
I think he does feel that way, and it may be transitory, but it's going to be that Goldilocks sweet spot of that. But the Mr. Magoo thing was about how the Fed historically just keeps raising and raising until something falls apart, and he hasn't done that. As I said at the open, we've had 4 pauses in the last 5 minutes, 5 meetings rather. That's a lot different than Mr. Magooing it and just bumping into dumpsters and stuff. He seems to have gotten in sync with the leads and lags a little bit better. I think he's learned something over the past 3 years, thankfully. And so we're at that point where he has repeated, as Steve Leisman said, he realizes that not all the tightening has gone through the system. So that's anything but hawking it up. I mean, that's him saying, some of the tightening is still yet to be felt. And that's going to be the case as long as we're higher for longer. As long as the Fed funds rate stays where it is, you're having problems in the system. You have a lot of loans. You've got banks that have investment portfolios yielding 3%, and the Fed funds rates at 5 3/8. So they're losing money on that. You've got small companies that are having elevated borrowing costs, and every single day it becomes more painful. And every month they have debt at lower interest rates that is rolling off. The fixed rate debt, which maybe issued a few years ago at 1%, that's rolling off, and that's higher. And so this is working its way through the system. He understands that, and so I compliment him on that. He's learned, and I think the only thing I can fault the Fed for in the past 5 meetings is that they shouldn't have hiked at all. They should have stayed on pause the whole time, but that's pretty close. And one more thing I want to say about economic indicators is the commodity price trend, which has been straight down in a nonstop way on a moving average basis for the better part of 2 years. And the Bloomberg Commodity Index just can't get above its 200-day moving average and stay there. In fact, the gap is getting wider. And so it's interesting that, gold's up today, not surprisingly, with interest rates down, but commodities broadly on the BCOM are unchanged. So the stubborn weakness in the Bloomberg Commodity Index is further suggested to me that inflation is going to be lower than people think. And I'm wondering if we won't have a zero year-over-year inflation at some point in 2024.
I understand why you make the bullish case you do for bonds, which have, as you said, had a historic rally. November was the best month for Treasury since the 80s, for obvious reasons. We've dropped near 100 basis points on the 10-year, for example. But why shouldn't people buy stocks today? Why shouldn't they say?
If you want to buy, because they're up massively since the last Fed meeting, and they're in pretty rarefied territory, and the economy is going to be slowing, and earnings are going to be less robust than people think. But if you want to own stocks, of course, everybody owns some. I think that one trend that has been very clear throughout 2023, for good reasons, is that equal-weighted stocks like lower interest rates, and they don't like higher interest rates. The Magnificent Seven don't care, really. They're in a world of their own. But we've had a lot of talk about equal-weighted versus market cap-weighted, and we've seen equal-weighted do quite well since the last
Hi,
Fed
Tick
meeting.
Alert
There's
plus
a reason for
800.
that. The Fed hikes hurt the equal-weighted more than the market cap-weighted because it's the smaller companies that get taken out by higher interest rates. And so I think you want equal-weighted rather than market cap-weighted at this juncture. And so I don't think there's a terrible valuation in the equal-weighted.
Extreme high Tick Alert.
It's maybe 15 times in the equal weight, but it almost sounds like
Okta making new highs of the day. Okta new highs of the day.
But someone could take what you're saying, Jeffrey, as making the case for an everything rally, that the equal weight part of the market, S&P 473, or 493, for lack of a better description, obviously, is going to get a boost now if the Fed truly is done hiking and the next moves, multiple of which are cuts. The economy's still hanging in there. Why not?
Well, I just think that the everything rally concept is a realization of what's happened in the past 6 weeks. And we kind of expected that because we now have the full Fed pivot. It sounded pivot-ish, but it was more balanced back in November 1st. But now we have a full Fed pivot with the word any showing up and Powell talking about lags and all that stuff. So I just think that we're getting late in the cycle, and you can hang on there with risk assets. And I'm not exactly advocating against it, particularly in the higher credit sectors, but not investment grade, but maybe double B sectors of parts of the bond market.
Extreme high Tick Alert.
Even there, I think you will have a reversal come the middle of the year. So we can hang in there for now, but I think stocks are pretty overvalued versus where they were, say, I don't know, 6 weeks ago, or certainly back in March.
It is a stunner. Lastly, before I let you go, that, as far as yields have come down, you mentioned, you'll have low threes by the end of next year sometime. We could have high threes by the time I say goodbye to you here today, which is remarkable considering we were at 5% not that long ago.
Beyond Meat is popping.
October 23rd. In fact, the New York Times had a business section article that I saved because it said rates are not going to come down anytime soon. As the cover of the business section, I said they're ringing the bell. But there's an old say. I'll leave you with an old saying.
Hi, Tick Alert plus 800.
And that is, stocks need bonds, but bonds don't need stocks. And right now, stocks are needing bonds and they're getting it. But we'll get into that phase, I think, in the second quarter or so of next year, where bonds don't need stocks, but stocks won't be participating the way bonds will. So that's how I think about the pivot. But I also think it's going to be a year of great volatility. volatility in 2024.
Well, we'll look forward.
Extreme
to
high
spending
tick
it with
alert.
you. I can say one of the true highlights of this year, Jeffrey, was spending every Fed day with you exclusively here on Closing Bell. I look forward to doing the very same thing next year. You have a good one. Stay
Well,
healthy. Happy New Year.
I've enjoyed
We'll
it.
see you.
Yeah, good luck, everybody, and good luck in the new year.
All right, that's Jeffrey Gunlock. Once again, exclusively from Double Line with us right here on Closing Bell. Let's bring in CNBC contributor John Brown of Ritholtz Wealth Management. I'm crying. What's your? I have tears in my eyes. What is your assessment here now? What does this mean for stocks moving forward? Let's just take it from there.
Some stocks are overvalued, but on the whole, the asset class not overvalued. That's the only thing Jeff just spoke for 30 minutes. The only thing I disagree with him, the blanket statement that stocks are overvalued. You can buy small caps for 12 times forward earnings. You can buy mid caps for 13 or 14 times forward earnings. You can buy large cap basic materials 9 times earnings. I feel like there's a lot you could be doing away from the S&P 50.
Extreme high tick alert.
Consumer discretionary. There's a lot you could be doing where you are not overpaying for stocks, especially if you want to take the Fed at their word that we're going into a cutting cycle. I categorically disagree. Money markets were the trade of the year. $6 trillion in money markets right now. We don't need it all, quote unquote, all to go into stocks. If any meaningful portion of that $6 trillion goes into stocks, doesn't have to go into the SPY ETF. It can go into dividend aristocrats. Look at them. NOBL. Look at the way they're treating the VIG, Vanguard dividend. This is where the money is flowing right now because everybody understands this. You could buy stocks without buying the 7 stocks. And that's the trade right now. I think that trade carries us through. I have tears in my eyes. This is like the end of a romantic comedy. Everything fell into place. We're going out with a VIX at 12. What else do you want? We have vanquished. Who's laughing? Liz? We'll see you in a minute. We have vanquished 9% inflation. We did it. We did it without a single person losing a job. Please understand that. We just printed plus 199,000 new jobs last month, and the war on inflation has been won. VIX at 12, stocks cheap enough to buy. All of the most widely held stocks in America having massive double digits, in some case triple digit rallies off the lows. Plus, we averted a potential banking crisis. What else could you have asked for out of 2023? I don't know.
You make the argument that the bear case is firmly dead.
No. The 2023 bear case is dead. The 2024 bear case is still ahead of us. There are probably going to be reasons to be concerned, but right now, as we end the year, you think about all of the things that went bump in the night, all of the things that we focused on day after day that could go wrong. None of them went wrong. They still could. They haven't. That's the story of. By the way, the story of 2023. A lot of conventional wisdom got turned on its ear once again. One of the big ones. I was talking with a housing market expert yesterday. You had Fed funds essentially. You had mortgage rate go from 6% in February to over 8%. It actually started from 2.6% 2 years ago. What did home builders do this year?
All-time highs.
Up 50% on the year. That's not supposed to happen. A lot of things that weren't supposed to happen. And the big story, the Fed was not supposed to be able to, quote unquote, win the war on inflation without costing us any jobs and without throwing us into recession.
Because as the Fed chair, and I thought this was interesting too, we didn't get to talk about it. Yet in the news conference, he was discussing why in his mind, the inflation that was caused in this cycle wasn't traditional. It wasn't caused by some out of control demand. It was caused in many respects by supply shocks. Sure, you can criticize the fact that they waited too long. They were buying mortgage bonds when mortgage rates were low. And you can criticize the government for piling on with a lot of the stimulus, but in many respects, maybe the reason why we're even having this conversation is because those things happen. And the reason why he can maybe declare victory at one of these next meetings is because better late than never. They were aggressive, they were quick, and now we're going to see what happens.
So Jeff was quoting from Braveheart. I'll do my own. William Wallace said, we all end up dead. It's just a question of how and why. Every bout with inflation ends up dead. It's just a question of how and why. The 1970s inflation paradigm was the wrong paradigm. I'm not the only person, obviously, that pointed this out, but I still think it's really an important lesson. The real paradigm to have focused on was post-World War II. We had tons of stimulus in the system. That's what was necessary for the arming of the country and the world against the Axis. That inflation took like 10 years to work itself out of the system. We had rising rates throughout the 1950s, and yet stocks were able to work. And we didn't really have any meaningful economic issue. That was the right paradigm. We had this massive burst of stimulus to make sure that society didn't tear itself apart, and we told people to stay home. It worked. We actually did too much of it, but it was not this lingering issue in the way that it was when we had oil embargoes and the like. It was man-made. We created it, and we were able to allow enough time to go by for that inflation to moderate. And it's not fully out of the system, and people are still paying high prices for shelter, for healthcare. Auto insurance sucks. I get it. I'm not saying like everything's great. Considering how much worse things could have been in this fight to bring inflation down from nominal 9% back on the road to 2, it could have been way worse, and it wasn't.
I mean, we're not, and that goes to, and we're not insensitive at all about the layoffs that have been announced, which layoffs continue to be announced in some respects.
On a net basis, thankfully.
Not to the degree.
Hi, Tilt Alert plus 800.
At this point, at least.
All right, back up to the highs. We got 16 minutes to get there.
Judge, last thing on this. You have 8.6 million open jobs. If you were ever going to be laid off, this is not the worst time for that to happen. Of course, we care. On a net basis, we did not have to throw millions of people out of work to tame inflation. That is the story of the year.
So listen, stay with us. Let's take a quick break. When we come back, we'll forecast the Fed and the market. SoFi's Liz Young joins us here at Post 9. We'll get her first reaction to the news conference. More importantly, what it means for stocks moving forward. We'll do that when we take you inside the market zone.
All right, just sitting here listening to Josh Brown and Wapner as the markets come into the close. I got a hard stop at 4 o'clock. Again, got to go to my daughter's school. She's going on a trip in January, so I got to go see what they have to say about it. All right, so congratulations. Really great day today. Just scanning through stocks and deciding if I want to take some things off or just let them run. Credit spreads, they're fine. The markets are moving up and away. So all those credit spreads are going to expire worthless.
Welcome to Market on Close. We just heard from Jerome Powell, the Fed chair right now, is taking questions from reporters after a pretty big event this afternoon with Fed members signaling 3 interest rate cuts next year. The market is rolling with it. Stocks are up. Bonds are rallying big. That 2-year trend line in the 10-year we're monitoring is breaking. The uptrend in yields is under major threat right now, with bond bulls piling in, shoving past each other to buy treasuries. 10 years at 4, and a pretty flat 4 at that, almost back down to where we were back in February, March, before regional banks put a fear into bond bulls. This one is a tricky one.
Is the Fed seeing through to recessionary style risk they need to get ahead of, or are they really confident that
All right, a little bit more profit taking. A lower high for now.
they can start to signal their reversal before they get to their target? The best question I just heard of from Gina Smilik at the New York Times asking if the Fed would cut even if growth stays above trend, which it has had a habit of doing here the last couple of years. Powell kind of bounced around it a little bit, but Gina pushed him, and he did say it could work against their goals if the economy grows better than expected, keeps jobs supported, and applies upward pressure on wages and inflation. But that half segment there, that sort of begrudging admission by Powell that could get in their way, is the only thing here I've heard all day that isn't hugely dovish. It's borderline like we don't even need to watch it. What is good news when you
We're now in the closing bell market zone. I should remind all of you once again, the Dow Jones Industrial Average at this very moment is above its all-time high, and it is set to close at a new all-time record high. Right now, it's above 37,000. So we'll watch that over the final 10 minutes. Right now, join Josh Brown. As you can see, he's back with us. SoFi's Liz Young is here. CNBC senior markets commentator Mike Santoli. Everybody here to break down these final moments. Liz Young, to you first. To the Bears. Throw caution to the I didn't say you. Throw caution to the wind now or what?
First of all, I'm excited to be in the market zone. I never get to do
All right,
this.
well, welcome.
I think you can throw caution to the wind for a little while. Things changed today, and Gunlock used the word pivot. We moved to a different part of the conversation, right? We went from they were talking about maybe hiking. Now they've basically declared that's over. We're talking about considering when we should be able to cut. Now, the idea of the market pulling cuts forward, though, I think is precarious, right? We continue to pull them forward. We don't have a lot of time between now and March, and the Fed likes to foreshadow things really far in the future. First we talk about cutting, then we actually cut, right? So they need a little more time than that. I think pulling it forward is dangerous. The other thing that I know I've mentioned on this program is that the period between the last hike and the first cut is usually okay. So I think you can, for the time being, jump into this rally, let it run, let the clock run on it. But as soon as that first cut comes into view, you get more nervous.
Mike, save for a cut happening today. This was about as dovish as the Bulls could have ever hoped for, right?
I think it was high hopes exceeded, because I think we really did expect more or less that a nuanced type of pivot that was much more explicit. You didn't have to read between the lines. He didn't throw out as many of the typical disclaimers of saying, don't really look at the dots. They don't mean anything. That's what he sometimes does. He didn't
Low tick alert -800.
anything from this thing. Now, that being said, and of course, you mentioned the Dow. The S&P is within 3% of its record high. It's pretty rare you get within 3% of the record high. You don't at least make a run at it over the next couple of months and maybe hit it. So all the things moving in the right direction. A lot of technical repair in this market. The Fed is now no longer pushing against it. We got confirmation too of a couple of things I'm trying to look at, which is the Fed is not really targeting market levels. It's not looking for bank shots of trying to influence financial conditions this way to get inflation to do what it wants. It cares about inflation. It's the only thing that matters. So therefore, the atmosphere surrounding it, they don't have to look at job openings anymore. It's all about the inflation numbers. That being said, so much has worked in favor of this market in the last 2.5 months that you have to start to sit back and say how much is left. You had the soft landing celebration rally, you had the rate relief rally in banks, you had kind of the low quality, heavily shorted garbage that got washed out, and you had a repositioning rally for people that know enough stocks. A lot of that's different right now. So I think you have to be at least cognizant of the idea that it's everybody can clap and say we did it, and it's a culmination type moment, and then figure out what it takes from here. And maybe a 4% nominal GDP economy next year, if we're lucky and everything comes through, it's a different tone than what we've been dealing with recently.
I mean, Josh, he had a chance today to express any sort of concern or worry that financial conditions have loosened, given, the 10-year's down 100 basis points in 6 weeks, and stocks are up an awful lot in 6 weeks, and he really didn't do that either. To Mike's point, that they are. If this doesn't tell you that inflation is the only game in town, then nothing ever will.
Well, he also has to be intellectually consistent. So if we're saying during the tightening cycle that it operates on a lag, then let's also say that cutting rate, the risk of cutting rates is probably not the immediate risk of things getting too loose, because that operates on a lag as well. At least that's how I would choose to see it. I'm curious for you guys, the 2-year, we talk a lot about the 10-year, the 2-year down 30 basis points today, 4.45. Is it down enough?
Well, a one-day move in the 2-year, first of all, if you look at that chart, take the title off of it, you'd think that was some kind of small cap.
It's like Snapchat after reported earnings.
Right. So first of all, just volatility that big in the treasury market is not a comforting sign to me. Is it down enough in one day? I think that's plenty in one day. I think over the course of the first quarter of 2024, it's going to come down considerably more, especially if we expect rates to be cut starting in March. But then what that means is the yield curve uninverts, right?
Yeah.
Then you've got a re-steepened yield curve, which might be good for things like financials. And again, you talked about the valuations, I think, earlier in the show. That might be a good time to start towing into something like financials. But an uninverting yield curve at the beginning of cuts is usually a dangerous time for markets.
Mike, the top 2 performing sectors, utilities number 2, XLRE, S&P real estate number 1. Not a shock to me. Is anything about that surprising?
Pure,
That's low, right?
yes.
Okay.
Pure rate beneficiaries as well as under-owned. And what to me is a little more significant is one of the biggest drags in the S&P today is Microsoft, which is down. Okay. Microsoft's the ultimate defensive, widely owned, universally owned stock.
I'm glad you went there because it's exactly where I wanted to go. Microsoft.
All right, we got about 7 minutes to go. I apologize for being so quiet, but everything is working. It's moving higher. Really nothing to tell you. Most likely get a nice follow through day tomorrow. So congratulations. Had a nice day. Great week. Today was one of the best days I can recall since the last week of October reversal. So just sitting here listening to this market on close thing on CNBC.
High tick alert plus 800. Extreme high tick alert.
High tick alert. Extreme high tick.
And in terms of how much risk the mega caps are, I don't know. I mean, so Microsoft's given up 130 basis points of outperformance in a day. It has a lot to give, right? It's not as if it's about kind of really damaging those trends. I think it's much more about where the incremental dollar goes, what's less owned.
Oh boy, John Deere looking really good. Thanks.
Sort its way out from there. And maybe that means the index itself has a little more of a struggle, but it explains a 12 VIX because we have things moving in different directions. You have low correlation for now. And to me, again, I keep saying this, it's one of those things that reminds me of like 2017. You finished the year on a massive flourish. It was a melt-up market. Early 2018 is when you had that weird volatility storm out of nowhere because people got just completely kind of wedged into this low-vol melt-up mode.
Liz, do you agree with Gunlock that he doesn't think that money's going to pour out of money markets into stocks? Where that's one of the bull cases here. For
Extreme high tick alert.
To this market. By the way, S&P just hit 4,700 again. Just to let y'all know again, Dow Jones Industrial Average had a new all-time high, and could very well close there for the first time ever. Either anything above 36,799 and change is going to get us to that mark. But what do you make, Liz, of that idea that money has now gotten the go-ahead, so to speak, to come out of cash and into stocks? It may go into bonds too, but a good enough portion of it is going to come into stocks, and that's going to make a difference.
Well, think about the reason it went into money markets in the first place. It went in because you could get 5%, more than 5% in dividends or in a yield with little to no risk. So you have to convince people to come out of a 5% yield, and that may happen as the 2-year comes down because it won't be as attractive anymore. You have to convince them to come out of a 5% yield with little to no risk into parts of the market. I think the expectation on some is parts of the market that are already overvalued. I don't think that's going to happen. And I think you see sort of a slow flood from money markets as rates come down. But I think he's right. It doesn't all go into tech. It doesn't all try to jump on a bandwagon.
High tick alert plus 800.
Attractively valued areas of the market. We talked about this the last time I was here too. That's the tipping point. If money comes out of money markets and people have enough risk appetite to deploy it into cyclicals, not just utilities, not just staples, cyclical sectors, and credit and high yield, then that tips us into maybe we've reached the all-time high. You've got a rally that looks a lot more durable.
Gosh, the Russell better than 3%, 3 1/3% right now, approaching 2,000 on the Russell 2000.
I just think you have a smorgasbord of laggers that are now like almost putting in overtime to try and catch up, which is exactly what the thesis on the desk has been really since before Thanksgiving. The way that this year would come to an end. It's all playing out. Look internationally. Look at how European stocks look like they want to finish this year. Specifically, European financials, which have no business.
All right, 2 minutes to go. 2 minutes to go.
Like there's no tomorrow. Then look here stateside. You got ARK up 3% today. You got biotech up 3% today. The businesses underlying those stocks are not rate sensitive. The stocks are rate sensitive, and they are moving. Metals and mining up 3% on the day today. I mentioned all the dividend payers. These have been lagging sectors all year, and in some cases, sectors where there's been a lot of pain. Utilities have been absolutely awful, but they pay a yield. Yields are coming down in risk-free. Therefore, you are going to see rotation into those high dividend payers or the dividend growth names. And I think it has legs into January. I don't think we're done.
Mike, we're on 3-handle watch for the 10-year. We're at 401. Yeah. And that's going to be a considerable story moving forward.
Yeah, I honestly, a lot of folks, for good reason, thought it'd be sticky in the 410 to 3.
All right, seconds to go. Seconds to go.
It is interesting, as I said, you would expect maybe some re-steepening if, in fact, this is going to be the Fed is done and we can kind of re-accelerate a little bit in the economy and inflation expectations, maybe a bottom. I mean, you kind of have to start thinking in reverse of how it goes. But for as long as it lasts, it just takes the pressure off. The biggest impact, regional banks, flying because they're basically having their balance sheets refreshed by every move lower in the long-term yield. So everything is, it's hard to really find fault with a lot of it, except for the pace of it and the idea that nothing just started today. Today was just an extension of a lot of the things that happened over 500 points now, highs of the day.
Wonderful day today. Congrats, everyone.
Same to you, Liz Young. Mike Santoli, as always, is going to stick around, of course. That bell marks a new record high for the Dow Jones Industrial Average, going to close above 37,000 for the first time ever. I'll see you tomorrow in the OT with Morgan and John.
Closing at session high, the record close for the Dow Industrials, hitting 37,000 for the first time ever after.
I'm out of here. Take care, folks. We'll see you tomorrow. Ciao.